This whole episode will turn out to be transitory. But the reason why it's transitory is because the Fed reacted.
The Fed is a risk manager.
I think they need to stop. This is a war that they've won, and they're in danger of tipping the economy into recession. I think they're making the fiscal problem worse.
It's the prevailing view now, and I think it's right, that we're heading lower in inflation, and we've seen a peak.
Inflation has a number of parts to it. John Williams talks about the inflation onion. We've gotten the good news on the outer shells.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Earnings season begins right now, live from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance on TV and radio. Alongside Tom Keene, I'm Jonathan Ferro. Equity futures down about 0.1% on the S&P this hour. Looking to hear from Bank of America in the next couple of hours, from Goldman, perhaps a little bit later next week, Tom, and then JP Morgan later this morning as well. TK, can you keep up?
Well, yeah, I can keep up. Why? You think I'm not here? Happy Friday to you, too. No, the answer is, yeah, I think it's going to be interesting to see. It's always interesting, but ever more so with what we've seen on the inflation dynamic, how the banks deal with that, how it does with their traditional banking, and also what they do. And the answer is they're going to do exactly one thing here in Davos, and after Davos, they're going to cut costs.
The recession talk, Tom. Tesla, should we start there? 20%.
They got like 8 ways to start today. It's a busy Friday, folks.
Right there. Yeah. 20% price cut, US and in Europe.
Dick Berner was a giant at Morgan Stanley, and we once had dinner, and he and I walked through what fixed costs and variable costs do to a company. I would suggest an automobile company, whether it's run out of a Twitter headquarters or not, is a massively fixed cost business. When you cut 20% in pricing, revenue is unit in pricing, you need a real unit makeup to cover any of your marginal fixed cost change.
Where does that volume come from? China reopening, Europe?
Is it that, or is it the new competition in EVs? You know, I sit there and I watch the EVs of New York City drive by, and not all of them are Teslas.
Have you seen the performance of the airlines so far year to date?
Yeah.
I went through the numbers overnight, Tom. United up 36%. This is 8 trading days. American up 32, JetBlue up 25, Delta up 20.5%. These are major gains.
And one of our guests said, is there a huge repositioning going on? And the repositioning is not only there in equities, and we'll talk a lot about that today, red and green on the screen, but also in foreign exchange. People here that are not focused on the nuances of 20 or 30 different pairs, which you can do in the Bloomberg, there's some real tangible movement I did not expect in foreign exchange.
Well, let's talk about it. Dollar's collapsing. Can we be clear about that? The dollar peak at the end of September,
yes,
down by more than 10% since then. The yen is stronger again this morning. We've had dollar yen go from 150 to sub 130. We've had cable go from 103.50 through 120. And euro dollar, Tom, we were talking about 95. Now we're staring down the barrel of 110.
Yeah, let's dive into this now because we got a bank extravaganza coming up. For Global Wall Street this morning, folks, a linkage here of economics and finance trying to get out front of 2023. And I'm going to use this word respectfully, is the unraveling of Japan. I went back and looked. I did a very careful regression study of YCC, yield curve control. And they're not out 3 or 4 standard deviations, John. My mathematics is they're out over 6 standard deviations off the hope and prayer of yield curve control 2 years ago. The yield has come up. It's breached through their collar, if you will, and you see it in weak and strong yen.
Does that get dropped next week? That's a massive question for us going into that BOJ meeting. The threshold 50 basis points, to TK's point, went through it in the last trading day. Let's get you some price action. Equity futures on the S&P 500 look a little something like this. We're negative not even 1/10%. Looking for numbers from JP Morgan and from Bank of America a little bit later this morning. Yields are higher by a single basis point. Your 10-year 345.22. Euro dollar 108.39. Euro dollar right now negative 0.1%. Joining us now is Katrina Dudley, portfolio manager and research analyst at Franklin Mutual Services. Can we get straight to you, Katrina, on just what you expect from the bank earnings a little bit later this morning?
Look, I think what we're looking for the bank earnings is really that arbiter of whether or not we're going into a recession, because I think they're going to be the first line of defense here and the first people to see it. So we're looking closely at JP Morgan when it comes out and to see what Jamie has to say about where we are in the economic cycle.
Yeah, I look, Katrina, at the economic cycle, and I would suggest in 9 days has changed. And for a portfolio manager with all the sell-side advice you've got, your internal wonderful advisors at Franklin Mutual, have you, not radically adjusted, but is there a change agent within a given portfolio because we've gone from December 20th to what we hope will be January 20th?
We're a value manager, so we do not make those very, very significant shifts in the portfolio.
You're not shifting, Katrina, you're not shifting on the inflation dynamic now as a value manager.
No, in terms of the inflation, we continue to see the Fed working and bringing it down. The question is, and that's the question we've been talking about all over 2022, is whether or not the Fed engineers too much of a recession or whether or not they walk that tightrope of slowing down the economy to slow down inflation without tipping us into a deep recession. We've continued to be of the position that if we do go into a recession, it will be a mild one. And I think we're seeing all the signs of a very mild recession. And that has very good implications for companies because it's manageable. A deep recession is really difficult to manage. As you talk about that fixed versus variable cost curve, we think a mild recession, companies can muddle through.
So on a value basis, which sectors do you find the best dynamics to surprise into, say, June or July?
In terms of surprise, one area we're looking at is the industrial sector. I think that when we're talking about industrials, we're not talking about as much the autos that you're talking about with Tesla, and we are aware of what happened there yesterday or this morning. We are now looking at industrial companies well-placed, and they have this really good secular theme that we're focused on. It's the electrification, it's Industry 4.0, it's the Inflation Reduction Act. Those things will be structural drivers, and we're just making sure that these companies have enough wherewithal through 2023. We think the order books are very, very strong. The backlogs are at very high levels. And we think that the variable costs, so rising wages and any other type of inflation, is really manageable. These industrial companies are areas that we like.
Katrina, where do the miners fit into this? We caught up with a guest a little bit earlier this week, Chris Verone of Strategas. Rio, absolutely ripping. He liked Rio, BHP, Glencore. Where are you guys on those names?
We do own a position in Rio, and we disclose that, and we like the asset quality that we have there. But you're right; those type of names have gone up substantially, which makes the valuation case a lot harder than it was just a few months ago. But as a value manager, we're looking at where are they positioned in the commodity complex, and we're trying to make sure that we've got that really good combination of companies that, while they are dependent on commodity prices, they have a lot of things that they can do internally that will drive earnings in addition to realizing the benefits of the commodity cost moves both up and down.
Katrina, can you just go a little bit further there? You said it's important where they are exposed in the commodity complex. Where do you want them exposed and where do you want them not exposed?
I think that we can look at something like the copper market, which people are very much structurally bullish on. We're seeing some signs that actually that's coming into balance. And what does that mean is you're likely to have some level of pressure on prices, but balance is okay. It's when we have oversupply that we need to be cautious about. So they're the type of markets that you want to avoid. And so from our perspective, we just push them to the side and we focus on those type of commodities where we have the either iron ore exposure and we have copper exposure and various metals where we're very comfortable with that supply-demand dynamic.
Well, Rio has that, that's for sure. Katrina, thank you. Katrina Dudley there, Franklin Mutual Series. Looking ahead to the earnings later this hour and over the next week as well. Let's get straight to Shanali Bassett, Tom, just on a headline that crossed the Bloomberg just moments ago from Goldman. Shanali, good morning. That was unexpected.
We've expected them to restate earnings here for the last 9 months, the first 9 months of 2022. And it's because they're reorganizing these businesses and they're going to report earnings on Tuesday. We have some details now of that reorganization, what it looks like inside. And you have a $1.2 billion loss here for that platform solutions business where the consumer businesses are rolled into. Now, over 2 years, really, from the beginning of 2021 through the first 9 months, months of last year, you have $2.2 billion lost in that business. Now, that gives you a lot of context into how things are going there during this reorganization as he pivots what he was trying to do with the consumer. Because remember, out of the new business lines that have been announced, it is really the only money-losing business over at Goldman Sachs.
Goldman reporting next week. We get Bank of America and JP Morgan this morning. Whole host of banks today, all at once. Shanali, what are you looking for?
Well, one of the things, even at Goldman, a lot of those losses are coming from provisioning for loan losses as well, in addition to expenses. So when we look over at JP Morgan, $2 billion are expected in provisions. Does that start to worsen throughout the year? We already know they're going to beat on net interest income relative to their initial guidance, similar for expenses, but they've already said that cards are going to start to moderate. Mortgages are still under pressure. So consumer businesses, remember, last year did much worse than the investment banks, which is not always typical for what you see in an environment like this. You were talking about rates earlier, Tom. That is a huge boon for the banks. They've made a lot of money. They're going to keep making more money.
I look at this, folks, and this is what's called an 8K. And the answer is it's a nothing burger except for one single block of data. And that is with this clownish phrase. What is platform systems? What is solutions?
You're going to take that up with David Solomon?
It sounds like McKinsey made it up at a cocktail party at Davos. What is platform solutions?
Platform solutions is where a lot of these direct-to-consumer businesses are going into, as well as this other business, which is now much smaller, transaction banking.
This is one of the worst paragraphs I've ever seen. The rest of it's a complete nothing burger. It's just a bunch of McKinsey management change stuff. Is Mr. Solomon's job at risk?
It's year 5. It's hard to say.
I'm looking at a vector trend here. There's no ebb. I mean, just in one, provision for credit losses was just one line item. 167, 310, 465. The trends are going the wrong way on this one paragraph in the 8K.
Let me set up the stakes for him for a minute here, because you have his Investor Day at the end of February. I think that's when the heat really starts to get on him. Once you get to next week, a few things to ask yourself on Tuesday. Morgan Stanley and Goldman are reporting neck and neck.
How much savings does he have off these Goldman Sachs cuts of the last week?
He has some leverage there. He has some leverage there. And the question is, remember, some of those cuts are not even from this consumer business. About a third are coming from the traditional businesses, which again are making money. So the competitive dynamic here going into next week, we've got to keep an eye on very closely.
Shanali, awesome. You're going to be with us through the hour, breaking down some of these numbers. Bank of America, JP Morgan numbers still to come this morning. Going into all of that, equity futures negative about 0.1% on the S&P 500. Live from New York City as we close out a trading week and kick off earnings on Wall Street. This is Bloomberg.
Keeping you up to date with news from around the world. With the first word, I'm Lisa Mateo. In Germany, the economy probably stagnated in the fourth quarter. That's easing fears that the war in Ukraine and inflation have triggered a recession. For the year, GDP rose 1.9%, just ahead of the estimate in a Bloomberg survey. Meanwhile, the UK economy may avoid a recession for now. Gross domestic product unexpectedly rose 0.1% in November. The reason? Consumers kept spending through the worst cost of living squeeze in memory. The new numbers would strengthen the case for higher interest rate hikes. President Biden's handling of classified documents erupted into a political crisis with potential legal repercussions. A special counsel has been named to investigate. Meanwhile, the White House has confirmed that a second set of documents was found in a garage storage area in the president's home in Delaware. Tesla slashing prices in the U.S. and major European markets after several quarters of disappointing deliveries. The electric car maker lowered the cost of its cheapest Model Y by 20%. Buyers can save as much as $21,000 on Tesla's most expensive vehicles. And the only child of Elvis Presley has died. Lisa Marie Presley had been rushed to a hospital in a Los Angeles suburb Thursday after suffering cardiac arrest. She was a singer who earlier this week appeared at Graceland, the mansion where Elvis lived in Memphis, Tennessee. Lisa Marie Presley was 54. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
We take this very seriously. The president takes this very seriously. He was not aware that the records were there. He does not know what is in the documents. Again, classified information, classified documents, he takes very seriously. When they were discovered, and this is the right thing to do, right? His lawyers reached out immediately to the archivists.
The president finding himself in a little bit of hot water. That was Karine Jean-Pierre, the White House press secretary, live from New York. In the next couple of hours, our attention switches to earnings in America, on Wall Street, Citi, Bank of America, JP Morgan, all coming in the next couple of hours. Going into equity futures totally unchanged on the S&P 500. 3-day winning streak on the S&P. And would you believe it? The 3-day winning streak on the S&P, longest daily winning streak since early November.
Since 1964.
TK, it's been that long. Yields are up by a basis point.
It's a new feeling.
345.40.
This is important. It's a new feeling out there, John. And I think the gloom crew has been silenced. They reaffirmed their gloom, and the optimists are going, well, this happened fast.
How about that 10-year, Tom, from 433 in October down something like 90 basis points?
I did a very careful study today of the trend of the 2-year yield, and I can't say yet it's broken down. I mean, other technician types can say that, but I can't get there yet. But it's made some real headway.
Hey, we're down 30 basis points on the year so far at the front end.
2/10 comes in negative 67 basis point. Right now, she's outside a Corvette dealership. Anne-Marie Horton joins us, Bloomberg Washington correspondent. Anne-Marie, do we have a clue what documents were next to the Corvette in the garage besides how to change the oil?
We do not know. There's a lot of questions that remain unanswered with this unclassified document story regarding the Biden administration. What we do know is that there were classified documents that should have not left the White House at the Biden Washington office that he used after he was vice president, and then, of course, at his house in Wilmington, Delaware, in the garage, which is, if you missed it yesterday, the president was asked why he kept these documents next to his Corvette. And he, made a quip that has basically gone viral, and I'm not sure it really helps his case, saying that, well, by the way, my Corvette is locked up, insinuating that the documents would have been safe if they were in a locked garage. But there's a lot of questions, and the White House really wants to make sure that they are not giving details on this and just leaving it to the Attorney General, who now has announced a special prosecutor, Richard Hur, and he is going to be the one that is in charge of this. So the timing isn't great, though, for the Biden administration, given the fact that he potentially was going to make a run, announce his campaign for 2024.
Well, give us the famous, John, you've heard about this, the famous Hoarder and distraction measure. It's a very important meter. How much of a distraction is this for Democrats in Washington? Is it a kerfuffle, or is this something tangible?
So at first it looked like an isolated incident that maybe was minor and they can move past. But then you had the revelation of second documents, which first was reported by NBC News, and then the White House came out with a statement. So this is the second time that a news organization came out about the statements. First it was CBS, and then the White House followed with a statement about the documents, So this is a lot of questions to the White House about why didn't they disclose it to the public in statements before it was scooped by news agencies. That's for one. And the second is when they came out and talked about the disclosure of the first batch of documents at his office, why didn't they talk about the fact that there was a second set of documents at his house? So now this has become much more of a difficult political story in Washington, D.C., especially the fact that there is also another special counsel that is investigating the former president. And Biden has made very clear that he thought what Trump did was completely reckless. And while there's very different facts and really just how this has kind of unfolded in terms of the Biden administration is working with the lawyers, the National Archives, and the Attorney General, which we did not see with the Trump administration for basically over a year. The fact is, politically, this is going to muddy the waters.
MH, let's talk about policy, if we can. Is anything on the agenda as we kick off the year?
Well, on the agenda for the Biden administration is really going to be foreign policy, and that's going to be on full display today when the Japanese prime minister comes into town. For policy domestically, it's going to be very difficult, right? You already see House Republicans moving forward with bills that will never, ever get a sight on the Senate floor because the Democrats control the Senate. So gridlock completely in Washington unless it's those must-pass bills, which we've already talked about, are going to come down to big fights.
MH, down in Washington. Anne-Marie, thank you. As always, ton of earnings coming through this morning. Let's kick things off with BlackRock for you. We'll start with EPS for the fourth quarter. I'll get to that important AUM number as well over at BlackRock. Adjusted EPS $8.93, the estimate $8.08. AUM 8.59 trillion. Yes, that's a T. Trillion. The estimate 8.38 trillion. Hearing from the CEO, Larry Fink, flows positive across each of our three regions. The restructuring charge, Tom, $91 million from job cuts. I think we might see a lot of that across the industry.
Yeah, the BlackRock prides themselves on clarity. They've got a beautiful presentation, 15 pages that they come out with. And the answer is you take 91 million and you divide it maybe over 90 days by 4.3 billion. So it's 91 divided by 4,300. It's a, is it a rounding error? No, but, they're probably spending as much on coffee in their food courts if they're still buying coffee for their employees.
Hey, to your point, cost discipline. Isn't that going to be a feature of this quarter?
Well, they love it. I wish we had Brian Moynihan here to sit in with us today. Lisa's on assignment, but the answer is, they're genetically linked to cost cutting. That is the solution at all costs.
The story in just the last couple of days, Tom, BlackRock planning to cut 500 jobs in the first retrenchment since 2019. It's been a while, and I think to the point that the Goldman cuts we were talking about as well. I think Sri Natarajan's done a decent job of this, Shnali Basak as well, just indicating that, Tom, through the pandemic, the cuts that were typically made, weren't made. And now they're all being made at once.
Yeah, and I'm in the camp where they're using this, that's 2.5% of their workforce is published by Bloomberg. See this, folks, on the description screen, the acclaimed DES screen. And John, I defer to, say, Paul Sweeney, who I think is way more knowledgeable about this than I am, helping me at 9 a.m. on Bloomberg Radio. And Paul would tell you 2, 3, 4% is normal. And if you go to a percentage cut at Bank of America, whatever bank that's Tesla-like or Salesforce-like, that's a different story. Are we going to see that in the earnings season here starting in this hour? I'm not sure.
Do we get the Mike Wilson of Morgan Stanley kind of earnings season that he expects?
In banking.
And beyond,
don't think
in
we
tech.
will.
You don't think we will in banking, but in tech?
I think they're in process right now. Maybe they've gotten out in front of it. It'll codify in earnings statements, but let's remember, John, if they let 42 people go in mortgage finance or whatever's flat on its back, they're probably hiring 45 people to code computers, when they're not at the monkey bar having lunch.
Well, to be clear, it might be easier to get some of those coders if you want some of those engineers from those tech firms, if you're one of those big banks on Wall Street, because that story over the last 10 years has been the story. But is that who the tech
firms are letting up? As you mentioned, the tech firms didn't lay off in the pandemic, nor did anyone else. Who are the tech firms laying off is a big question.
Are we done with that? Amazon went into the pandemic with 800,000 employees. Came out the other side, Tom, pushing 1.5 million, 1.6. And those numbers over 2-3 years are monstrous. I can't believe how comfortable we've all got with it. Kind of just sort of gloss over the numbers.
To me, the
to go
big
from
mystery,
800K and double your workforce in 2-3 years.
Just to pick on Amazon, in the conference call, how will they verbal the speed of change that they're doing with those big warehouses across this country, which, as a generalization, they overbuild. It goes to what we talked about with Goldman Sachs and Shnali Basak, and Sri Natarajan nails it in his story this morning. This isn't about losses at the consumer experiment of Goldman Sachs. It's the rate of change is moving in the wrong direction.
February 3rd for Amazon, if anyone's interested. Today, we're going to get numbers from JP Morgan and Bank of America. Up next week, we'll hear from Morgan Stanley and from Goldman Sachs as well. Your equity market, just a little softer, down 0.1% on the S&P 500. In the next 60 minutes or so, you'll hear from B of A and from JP Morgan. Citi coming up a little bit later this morning. Getting some earnings a little bit later this morning, waiting for Bank of America, then on to JP Morgan and to Citi as well. Equity futures going into it down about 0.2% on the S&P 500, coming off the back of a 3-day winning streak on the S&P. As I said a little bit earlier this morning, that's the longest daily winning streak since early November believe it or not. In the bond market, we look a little something like this on 2s, 10s and 30s. Your 10-year yield peaked at about 4.33 back in October, all the way back down to 3.4650. Yield's just a little bit higher this morning by a couple of basis points on a 10-year. On a 2-year, unchanged at 4.1355. Ended the year 2022 on the 2-year at about 4.26. So this is quite a move lower over the last couple of days. That's the move in the bond market. Let's finish on foreign exchange for you. In FX at the moment, we shape up as follows. 108.14 on euro dollar, negative a third of 1%. That has not been the trend. Has not been the trend at all whatsoever since September. We have had a much, much weaker dollar. The DXY dollar index down by more than 10% over that period, Tom. It's been a tricky moment for both the bond market, yields lower, and then you've seen what's happened in the FX market, dollar weaker.
Yeah, it's a trend that's in place, and there is some argument. We've seen argument today, this week, John, on Bloomberg surveillance on dollar trend, and there's some people that question the durability of dollar weakness, and that'll be, I think, a debate certainly to the February 1 Fed meeting.
Looking at the moves elsewhere, not much happening here, Tom. Maybe looking at Japan, perhaps, into the BOJ next week with that 50 basis point move. 50 basis points, the target, yield curve control, just going through that briefly. I don't think that's a major move at the moment into next week, Tom, but certainly it's a threat to the credibility of this BOJ, and we'll see if they back away again.
As we await for earnings in the beginning of the season, they are coming out. John, we had American Airlines surprising yesterday with some numbers, and Delta here just very quickly, traffic down 10%, capacity down 9%. I'm going to call it a bit of a miss, and maybe there's a bit of a lightness in the stock here in the second since Delta Airlines.
It sees the first quarter adjusted EPS at 15 cents to 40 cents. Tom, that's quite a wide band, isn't it? The estimate 54 cents. Before that, fourth quarter adjusted EPS 148, the estimate 130. You mentioned passengers, Tom, passenger revenue, Delta Airlines for the fourth quarter 10.89 billion, the estimate 10.6. The fact of the matter is these stocks have had a massive run. So Delta's down about 1.8% in the pre-market. I mentioned where they were, Tom, and what they've done so far this year over 8 trading days. Delta's up about 20% plus.
Yeah, I mean, it's been a real tangible move, and I think there's a mystery here, particularly on domestic business travel, seems to be what the sell side's looking at. What we're going to do right now with some free minutes here before the earnings extravaganza begins is drop in Shanali Basak here. And this is something I've talked to our colleague Sri Natarajan about, but I want to go to you on it with the Financial Times today, looking for the future of Carlyle. We should note that David Rubenstein, one of the founders of Carlyle, is very active with Bloomberg Television in radio. And this goes to two guys who are exiting or rumored to exit, Mark Mason at Citigroup, ex-Goldman Sachs and Lucent. And also, of course, Mr. Pruzan reported the other day. And what I find fascinating, in the turmoil of what we expect to see cost-cutting, do we expect to see all of these companies really begin to rationalize succession path?
Absolutely. Remember, a lot of these folks have been in these positions for a very long time, especially at the big banks, where there has been a lot of lack of movement at the very tippy top of the banks. Some people have been there for a certain amount of years now, so it's a progress story for Jane Fraser and for David Solomon. But when you look over at Morgan Stanley and JP Morgan, it's that second rank you have to really worry about attrition. Some people are retiring, right? You see that in a recession.
Pruzan stepped aside last week at Morgan Stanley.
But he's been there a long time. The reason Jonathan Pruzan is so interesting is because that CFO role and COO role at Morgan Stanley, think Ruth Porat, over to Alphabet. John was somebody you long watched and to see what his next move would be.
What about Mark Mason with Jane Fraser at Citigroup? I mean, is he a Jane Fraser acolyte, or is he from Corbett and another time and place?
They moved together. And Mark Mason and Jane Fraser are, the left hand and the right hand. And so
I think she speaks to them on a daily basis, Tom. Yeah.
I also kind of sit outside and camp out outside of the banks. But the reality is Mark is very close to Jane and a very important part of her turnaround story, whereas John Pruzan, of course, very important in Morgan Stanley, but the ranks are full there. The succession plan is thick, and it makes sense if he were to go into somewhere like private equity, especially, by the way, at a place like Carlyle, where the politics are very, very, very challenging. So to have a CFO, COO type to kind of smooth a lot of that over makes a lot of sense.
Shanali, stay close. We'll break those numbers with you when they come out, waiting for BofA and JP Morgan in the next 60 minutes or so. Gerard Cassidy with us now, the head of US Bank Equity Strategy and Large Cap Bank Analyst at RBC Capital Markets. Gerard, first to you, sir. What are you looking for from BofA?
And what we're looking for Bank of America, as well as some of its peers, is the expectation of very strong top-line revenue growth. That comes from net interest revenue. As you know, John, the rise in rates has been very favorable to all the banks, particularly for their net interest margins. The right side of the balance sheet for the first time, John, in the last 15 years is really important now, meaning you need cheap core deposits, and Bank of America has that. Now, on the other hand, we're going to see weak capital market numbers from Merrill Lynch. So it's going to be a tale of two cities for them, as well as the other big universal banks.
This conversation, Jared, about peak net interest margins, are we approaching that peak, at that peak? Is that peak behind us?
I would say what we're going to see is probably peak net interest margins in the first half of 2023. But the important number for everyone to focus on is not the margin necessarily. It's net interest revenue growth. We're still going to see double-digit net interest revenue growth for Bank of America and its peers in 2023.
I mean, Gerard, we've got three companies coming out at once. It's a bank extravaganza just to make you go further gray like me, trying to catch up with me. And Gerard, what I find fascinating here is to take a traditional ratio like tangible book, or I'll let you decide, return on assets, parse those three banks. Am I right that JP Morgan is more profitable than the other two?
Tom, you're right. Certainly, JP Morgan, as measured by return on equity or return on tangible common equity, is more profitable than Bank of America and Citigroup. Bank of America, of course, is more profitable than Citigroup. And Citigroup's biggest challenge is that they just don't have the strength in the United States in the consumer banking business. Bank of America and JP Morgan do.
You know, I looked, Gerard, I'm bringing it up here on the Bloomberg. John, the function is the GP function. You bring up a chart on.
Oh wow, thanks for that. That's useful. Shanali, have you heard of that one before?
Thank you, Gerard. I got Citigroup trading collegially at $49 per share, but fossils like you and me do a reverse 10-to-1 stock split. Is this stock still trading at $4.90 pre-Great Financial Crisis?
Tom, that is the math. That's exactly right. And it's unfortunate. Citigroup at one time was one of our premier banks in the United States. And unfortunately, they still have not fully recovered.
Our David Weston scheduled to speak with Ms. Frazier at Happy Valley in Davos. How happy is Jane Frazier right now? What is the urgency for them to launch off of $4.90, $5 a share?
It's Tom. It is there is a sense of urgency, but we have to remind ourselves they're turning around a giant ocean liner. It takes time, and unfortunately, the conditions in which they're turning it around, the rough seas have been awful for them. So the timing of the turnaround has been very difficult due to what's going on in the world economy, and of course with the tragedy in Ukraine.
Joe, can we just sit on JP Morgan just for a moment? 12 months ago, there were all these big questions that have been presented to Jamie Dimon in a fashion that hadn't been in a long, long time, if ever. And it was about cost discipline and the amount of money they were spending. And in the last 24 hours, the last couple of days, renewed focus on the amount of acquisitions and perhaps some sloppiness creeping in as well, Jared. I know they're not massive acquisitions. For the size of this bank, they're not huge numbers. But, Jared, what are you focused on?
We're focused on the core banking businesses, John, and that is, taking in deposits, making loans, of course. That's a core function of any bank, as you well know. But it's also looking at their investment banking and trading businesses. Even though investment banking revenues for them in the industry will be down well over 50% year on year in the fourth quarter, the trading revenues should be pretty good. But to your point on expenses, JP Morgan has had the higher level of rate of growth in expenses, and that will certainly be an area. And unfortunately, they got caught in a fraud on their most recent acquisition, which of course was disclosed this week.
Shanali, what did you make of this? Just the last 12 months, and not the last couple of days, but the last year for this bank.
For JP Morgan?
Yeah.
So the interesting thing is they do have, if you look very closely, they do have some retirements that have been coming. They have not been the Goldman Sachs of the world where they said we're going to cut thousands of people on our head staff, in terms of headcount, but they have seen cuts at the mortgage business. So they've held steady, so that does put pressure on expenses relative to, say, Goldman Sachs. So do they start to make those moves as the environment softens? I'd also say they sidestepped some problems. You saw Bank of America go heavier when it came on to risk-taking, especially in the leveraged finance market. But, JP Morgan has the biggest fixed income desk on Wall Street. So you saw another $70 million of losses there in European high-yield trading. So do they have more caution, I think, is my question for this year.
The stock has ripped as well since October. From the October low, JP Morgan's up about 37%. Jared, let's speak to that. The performance of the equities of the stocks coming into a new year. What do you make of it?
John, the banks are doing well, as you just pointed out, since October. It's been very impressive. But even year to date, the banks are outperforming the general markets. And the reason being is that I think investors are discovering that the economy is still very healthy. The real GDP now number coming out of the Atlanta Fed is pointing to a 4+% real GDP growth number. So the likelihood of a recession in the first or second quarters of 23, I think, is quite remote. Now, the second half of the year, that might be a different story. But it's this net interest revenue growth. Investors are recognizing if the Fed keeps Fed funds rates around 5% for an extended period of time, banks like JP Morgan, Bank of America, they're going to do quite well in that environment.
Well, Joe, to that point, how tethered are they to what happens in the bond market? Because yields have been falling to start the year, but the bank equities have carried on performing.
Yeah, it's a good point because it's interesting. The volatility in the markets last year helped, particularly in fixed income trading. It really helped JP Morgan and others. So believe it or not, if you get a less volatile market, the market's revenue may be affected and weighed on that. But then you hopefully offset it with stronger debt capital markets, investment banking. But the lower yield, that's a good point because now the mark-to-markets in their bond portfolios will be less, which means there'll be an accretion back into capital when those marks come through at the end of the first quarter.
Jared, you're sticking with us, I'm happy to say. Gerard Cassidy there of RBC Capital Markets on the big banks as we wait for Bank of America and JP Morgan. Tom, we talked about JP Morgan and not the hurricane. Jamie Dimon backing away from the idea that a hurricane is coming. Kind of tamed down, I would say dialed back his language earlier this week.
I think he's trying to get out to 100 pages on his annual letter this year. John, I have a chart. It's super secret on a need-to-know basis.
I could tell you were distracted. What are you looking at?
I'm looking at the 5 banks back to the make it 6 banks back to the beginning of the great financial crisis. And basically, there's Citigroup lagging big time, as Mr. Cassidy said. The other 4 bundled in collegially. And then there's Fortress Diamond. I don't know what happened with the Kool-Aid at JP Morgan late 2016, but it's a moonshot over the last 5 years.
Equity futures right now, down 1/3%. Bank earnings on Wall Street coming up.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. In Alabama and Georgia, violent weather killed at least 7 people. Much of the damage took place in Alabama, where a tornado cut a 20-mile path across 2 rural communities. 6 people were killed and more than 36 homes were destroyed or damaged. The FAA is out with preliminary findings on the computer failure that grounded all departing U.S. flights on Wednesday. The agency says it was caused when a data file was damaged due to a failure to follow government procedures. Now, according to the FAA, unspecified personnel were responsible for corrupting the file. It's a major boost to one of America's top exporters in its most important foreign market. Boeing 737 MAX returned to commercial service in China after nearly 4-year absence. China's Southern Airlines operated the flight. A Chinese airline hadn't flown passengers on a 737 MAX since the plane was grounded in 2019 following 2 fatal crashes. China's exports keep falling as global demand continues to drop off. Exports in U.S. dollar terms declined 9.9% in December from a year earlier. That was better than expected performance. Still, it adds pressure to an economy that's trying to recover from COVID-0 restrictions. And a big pay cut in the works for Tim Cook. Apple is reducing its CEO's compensation by more than 40% to $49 million this year. The company is citing investor feedback and requests from Cook himself to adjust his pay. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
Earnings on Wall Street begins right now. Let's get you some numbers. B of A fourth quarter trading revenue comes in at $3.72 billion. The estimate $3.31 billion. Fourth quarter EPS comes in at 85 cents. There's a ton of numbers here. Trying to distill it all. Shonali Basak alongside us.
She got them all before us.
What do you see?
Here's the problem here. You do have net interest income, which is the most important number this year for Bank of America, coming in light of expectations. Begs the question, where does the money come from? Even with rates rising, are consumers borrowing? Are businesses borrowing? Businesses have been very highly levered. We're going to look very closely into where those numbers are coming from. Provisions for credit losses of $1.1 billion increased $1.6 billion, according to Bank of America. So you do see an increase there in provisioning. The environment here potentially deteriorating.
To be fair to you and grizzled pros like Gerard Cassidy, when you see a headline that says fourth quarter net reserve build of 403, you can't analyze this stuff over a cup of coffee in 12 seconds on financial TV, can you? You got to dive into it.
You have to dive into
What are you going to dive into? When you're done with us and you're working feverishly here, none of you see this, but she's killing herself while she's not on air. What are you going to dive into?
So you have to think about where those softness numbers are coming from. Is it continuously the mortgage market? There's a little bit of worry about the auto sector here, and those things are persisting into this year. I will also give them the victory lap here on the institutional businesses because they had a strong beat in fixed income. They're having the highest results ever in trading. And so for Brian Moynihan, which restructured a business here in terms of talent about a year or so ago, it's a very big deal after the departure of some senior trading executives that they're keeping winning share there, especially with softness in the European banks in a tough market. So fixed income is up, equities met, but the consumer here is where there is weakness relative to what was expected.
Gerard Cassidy with us too, with all of his work at Tucker Anthony over the years, and then RBC Capital Markets. You know, I dive into the press release and the propaganda from Fortress Moynihan Gerard, and just as a basic idea, digital logins, 3 billion, digital sales grew 8% and represented 49% of total sales. 2, 3, 4, 5 years from now, Gerard Cassidy, are all of these banks digital enterprises?
Tom, Bank of America has been the leader in pushing the digital channel better than anyone else, even JP Morgan, in our opinion. But we're always going to have the multi-channel approach. I don't think you're going to see branches ever disappear. Now, the amount of business going through the digital channel will continue to grow. So you're right. I think you're going to see companies like Bank of America, JP Morgan Chase, and others continue to drive profitability and product through that digital channel because it's convenient to consumers, and also businesses, but it's also more profitable to the bank.
Bank of America right now up by 1.25% in the pre-market. JP Morgan numbers are out as well, so let's run through those numbers right now. Investment banking revenue comes in at $1.39 billion, the estimate $1.66 billion. So that comes in light. Ton of numbers to go through here. Overall revenue then, just a little bit lighter on investment banking. Headline revenue, adjusted revenue for the fourth quarter, $35.57 billion. The estimate, $34.15 billion. Just a bit of commentary from Jamie Dimon, the CEO, able to resume stock buybacks this quarter. Going through the numbers again, Shanali, what have you got?
Listen, one big concerning number is fixed sales and trading falling below expectations. The other concerning number is the provisions for loan losses, as we're talking about concerns about the consumer moving forward, coming in almost $300 million more than expected. That is well over $2 billion of provisions for loan losses. So the commentary moving forward about whether Jamie Dimon's hurricane and whether you think it actually comes into fruition is going to be super important. When you have weakness here on consumer and investment banking, to your question moving forward is where do the expense disciplines come from moving forward? So, yeah, I mean, you have people tweeting, not pretty. When you watch some of their core businesses here fall short, sets up the stage very strongly for Goldman and Morgan Stanley next week.
We've got to talk about those provisions for credit losses. Jared, I want to come straight back to you on that, both at BofA and at JP Morgan. That number there, the fourth quarter provision for credit losses, $2.29 billion, the estimate $2.05. What should we read into that?
John, I think it's a positive number, believe it or not. Sounds counterintuitive when you hear that, but you have to remember the new accounting for credit losses known as CECL, current expected credit losses. The banks have to do life of loan loss analysis. So they have to anticipate a recession over the next 12 to 18 months. And so building up reserves in the fourth quarter of 2022 is smart because most investors are looking at 2023 earnings. So they were able to build them up and still report bottom line numbers that were better than expected. But I would point out that we're going to see the banks continue to build reserves in case there is a recession. Right now, it looks like we're going to at least have a slowdown in the economy and possibly a shallow recession. So by building up reserves, we would take that as a positive because they still can beat numbers and still build up reserves, which gets to the point. You talked about it, John, the bank's doing better this year. This is what investors are saying, is that you can build up reserves and still report strong earnings because the revenue growth from spreads are quite good.
So, Shanali, this is pretty important stuff. Just how high quality is that loan book going forward into what could be a tough year, might not be a tough year? If you ask an economist right now, they've got no clue.
Yeah, JP Morgan's quarter includes $1.4 billion worth of reserve build. So, to Gerard's point, bringing this forward makes a lot of sense. It puts the bad news behind them. But when you look forward, 20%, to Tom's point, tangible return on equity here, that is through the roof. That is showing you that JP Morgan has leverage here when it comes to expense control, to posting those numbers. That 20% is nothing like you're going to see anywhere else.
Gerard, if you and I parachuted on this from other bank worries that we've had over the decades, I have real trouble with any kind of angst and hand-wringing here. I would say and suggest respectfully, Gerard, that they're literally trying to hide their profit. I look at the operating income of JP Morgan wrapped around a tangible return of 20%, 20, and they launched from, I believe it was $45 kajillion pre-pandemic. And I don't know what that number is right now, but it's a near double, Gerard. These guys are minting money, right? Are they underplaying it?
I think you're right. And once again, we have to come back to something very straightforward, which we haven't looked at in 15 years, which is the core deposits. And because the banks are in a Fed funds market that is approaching 5%, think about this, Tom. A commercial loan to a worthy borrower will reach 8% sometime in the spring of this year. And the cost of funding that, think of the checking account deposits. Banks don't pay interest on checking account deposits for consumers. That's an 800 basis point spread. Think back to where pre-pandemic, when the Fed was at 0 to 25 basis points, or during the pandemic, you didn't get those spreads. That's what this is showing.
I literally look, John, here just to make a comment on this, is I am looking at them no different than I look at a luxury manufacturing company with Dana Tulsi or any other sector. I got to go back and look pre-pandemic and what everybody, including Mr. Diamond, Mr. Moynihan, and the rest went through. And these guys, I would respectfully suggest, are literally trying to hide how much money they're minting.
Getting that commentary on the outlook from Jamie Dimon in the press release, the US economy currently remains strong. Still don't know the ultimate effect of these headwinds. Jared, the commentary over the last 12 months or so, will those headwinds turn into a hurricane or not? It's interesting there's a line in here about the ability to resume stock buybacks this quarter as well. Jared, can you run me through what you expect from capital returns at certain banks on the street through this year?
John, you just brought up a great point. The buyback being reinstated, that was not expected. That's the positive surprise here. You might recall this company was struggling with their capital levels in the second half of the year. So now, as we all know, these banks are generally paying out 30 to 40% in dividends. And prior to the pandemic, when there was minimal loan growth, it was quite often you saw a buyback that represented the other 60 to 70% of earnings. Then they all turned it off in the second half of this year, including Bank of America and Citi. And now for JP Morgan to come out and say it's back on it and put up numbers like this, it is a very strong statement, in our opinion, that the bank has plenty of capital and it's going to be able to grow and support its basic banking functions, but at the same time, give back even more capital in 2023.
How conservative do you think they will be, Gerard, given the reserve build that we're seeing? How conservative do you think they will be with capital returns in the year ahead?
I think they would be on the conservative side, not so much dividends. Again, dividends are pretty set. And that's another important point, John. If we get through this cycle without any of the banks cutting dividends or eliminating like they did in the financial crisis, that is a huge positive for the banks for revaluations coming out of this. But I think you're right. The buybacks will be more limited than what we saw back in the pre-pandemic period.
Gerard, very important question, and all our viewers and listeners know this, that these banks are the moonshot in credit card interest rates with a higher interest rate regime. Some of them are buttressed up against 28, 29, 30% per year. Is the credit card business stable for consumer banking in America, Or do they have to go out and basically co-op fintech with their ginormous profits?
Tom, it's interesting that the fintech threat that many people were concerned about 3-4 years ago has really been thwarted by the banks, as the banks have themselves been quite aggressive in investing in technology, but also in core banking businesses like credit cards. To your point, that's where consumers want to go for their credit cards and other businesses. But you bring up a good point. The yields in credit card portfolios are generally in the high teens.
Yields.
And as a result of that cheap funding, it's quite good.
You sound like a lobster farmer up in Portland, Maine. You're yielding lobsters instead of killing them. John, this is an incredibly lucrative business. Single line, JP Morgan, debit and credit card sales volumes up 9% due to the Bassick household.
It's all shenanigans. It's all to shenanigans.
That's what it said.
Hey, Gerard, thank you. We've got to let you go.
Come on, it's 28% business. That's called a loan shark business in my youth.
Gerard Cassidy,
28%
of RBC.
yield?
I don't know if you want to associate them with loan sharks.
No,
I'm sure they've got something to
I
say
say
about
this
that,
with
Tom.
immense respect to these banks, but everybody's worried about loan loss reserves. I've never seen 20%
They're willing to
tangible
pay
equity.
for those clients, though. You know, $800 million of the reserve build is in the card business. And so you're seeing volumes rise. You're seeing reserves built. They're taking on risk still, which means that how concerned really are you about the consumer?
Just for the outlook briefly, over at JP Morgan, seeing 23 net interest income at about 73 billion. The estimate 74.43 billion. The stock just a little lighter, softer in the pre-market. Also hearing from Wells Fargo as well. It's a miss on revenue, but expecting to resume stock repurchases in the first quarter. More still to come. Citi is just around the corner. Equity futures down 0.4% from New York. This is Bloomberg.
This whole episode will turn out to be transitory, but the reason why it's transitory is because the Fed reacted.
The Fed is a risk manager.
I think they need to stop. This is a war that they've won, and they're in danger of tipping the economy into recession. I think they're making the fiscal problem worse.
It's the prevailing view now, and I think it's right, that we're heading lower in inflation, and we've seen a peak.
Inflation has a number of parts to it. John Williams talks about the inflation onion. We've gotten the good news on the outer shells.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Live from New York City this morning. Good morning for our audience worldwide. This is Bloomberg Surveillance on TV and radio alongside Tom Keene. I'm Jonathan Ferro. Equity futures down about 1/3% on the S&P 500. Sonali Basak alongside us this morning, breaking down the bank earnings. JP Morgan, Bank of America, Wells Fargo behind us. Coming up is Citi. Got to start with JP Morgan if we can get straight to the stocks in the pre-market. JP Morgan, a little softer, lighter, negative in pre-market trading. Fourth quarter numbers, not of a massive concern. It's about the outlook here.
Yeah.
Down about 3.5%. So let's run through the outlook line by line. 2023 net interest income of about 73 billion. The estimate's $74.43 billion. Just a little bit of a line here about a modest deterioration in the firm's macroeconomic outlook. And Tom, off the back of some of these headlines, the stock just a little softer. I wouldn't say this is a massive dramatic move across the banks this morning, but certainly gets your attention.
Let me posit a question, and you and I grind this out every day on surveillance. Are these bank executives any different than the pundits we interview? They're trying to get out and game and guess an economic slowdown of some character. Because these are, to borrow from Variety and Hollywood, these are Buffo earnings. These are really good, 20% tangible return. Okay, fine, but the gloom, not the gloom, the tone, the tinge, John, is the first quarter, second quarter could be a real struggle.
It's the reality of the moment that we're in. We've come into 2023.
Fair, yes.
Asking ourselves a really simple question that's difficult to answer. Are we meant to be pricing in a growth slowdown off the back of all the tightening? Are we meant to be pricing in a growth rebound off the back of what's happening with China and the relief we're seeing in Europe? I don't think anyone can answer that question with confidence. So what do you do if you're running a bank? Super conservative business, you build reserves.
You build reserves, I get that, and I thought Sonali was very articulate on that in terms of the fact is there is a credit buildup, so you naturally build reserves. But far more than that is just the reticence here post-pandemic. And all of the economists, Torsten Slok yesterday and others saying we're still in supply-side shock. I would suggest these leaders are managing out 100 days with far more acuity than they were 5 years ago.
Shonali, you've been running through this. Just a short, quick word on what you're seeing so far.
Think about how incredible this is for the coming year. You have $66 billion, $67 billion in net interest income for JP Morgan. The expectation is $73 billion this year. It's hard to think that that's a bad year for JP Morgan ahead of it. And the idea that it just posted, we were talking about this in the break, 20% return on tangible common equity, even with missing on some business lines, while cutting bonuses, tells you the banks still have leverage, and that is with headcount rising, compensation costs rising, and tech expenses are actually down. So how they use that money is going to be absolutely fascinating in the year ahead.
I look at the financials here, and let's go back to that social consequence right now. We have a lot of viewers. For those of you worldwide on Global Wall Street, and particularly New York Wall Street, thank you for tuning in each and every morning. These people, there's some quant out there that's going to get a triple bonus because they got oil right last year and shorted it. Other than that poor soul, everybody else is getting hammered. How are they supposed to respond when they see the ratios that I see on these printouts?
I think what's difficult here is knowing where you're supposed to work on Wall Street. There are some businesses that are under serious pressure, like mortgages. And if you look at that, that has continued on, right? To your point on quants, great year, but does that also continue? These are super, super cyclical businesses. What JP Morgan is showing you in their numbers is that they're willing to hire more, but perhaps you'll make less under a bigger workforce.
That stock negative right now, 2.9%. The broader equity market futures softer by a third of 1% off the S&P, coming off the back of a three-day winning streak on the S&P 500, longest winning streak going all the way back to November. In the bond market, yields just a little bit higher by 2 basis points, 346.31. In front of us still, about an hour away, we'll get numbers from Citi. Let's get to Ken Leon, Equity Research Director at CFRA. Ken, fantastic to catch up with you, sir, around the earnings numbers around these big banks, as always. You've had about 20 minutes to go through the numbers. What stands out for you?
So I think for the bigger picture is we go through the winter of down earnings for the S&P 500 for the first and second quarter of next year. We're getting more confidence, especially for the large banks, that they're going to have year-over-year increases in the first and second quarter. We're getting a strong base quarter reported today that's going to give analysts more confidence to look to a more constructive first half as we cross the valley to potentially a stronger recovery in the second half of next year. That's a big story.
So, Ken, you think we'll be talking about reserve releases pretty quickly?
Reserve releases won't happen until probably the third quarter. Again, we're near historic averages just by building reserves right now. We don't have any distressed industries, and the consumer is still fairly strong. As Shonali says, they're also banking net interest income.
Is there a point here in the tensions of post-pandemic America to be strategic? And if not acquire banks, maybe they can't, the government won't let them. But is there a strategic vision for these banks to get larger?
They're too big, Tom. And also from a regulatory standpoint, there's going to be added pressure. We're going to be talking in February about a new leadership for the vice chair supervisory, Michael Barr, who's going to increase the capital buffers. So, they have way too much capital. It's about more aggressively lending it. So I don't think size is an issue on adding banks to these, but it's more of taking advantage of their deposits for increased loan activity. So things are more constructive today than they were even 30 days ago.
Thank you. I think that's a really intelligent comment. And with that momentum forward, what I see within the verbiage and the PR of these press releases is these banks are steeled to deploy cash to shareholders. When they start on January 1 of this year or next year or 2 years out, when they start on January 1, what's your immediate cash-on-cash return from these big banks? Can I dare say it's 8%, or is it more of a reasonable 6% immediate return?
Well, they're going to certainly look to how do they manage the regulatory regime and really what's required, related to the Dodd-Frank stress tests and other capital ratios. These are still regulated businesses So there isn't this unleash of all their capital, but it's there. So if you're a portfolio manager, you're saying, I have high quality companies, these large banks that are flushed with cash. There is return of capital with dividends and buybacks, not like Disney. And they're trading substantially below the S&P 500. To me, that is an opportunity to let these banks ride the wave of recovery.
John, can we start a surveillance rumor today that Nelson Peltz is going after J.P. Morgan?
I think that was
Would that work?
I think that was a dig at the Walt Disney Company. I'm not sure where it came from.
Well, Ken Leon, entertainment analyst, is with us.
That was certainly a dig. I don't think Shinali wants any part of that. Bank of America right now is positive 0.7%. J.P. Morgan up by 2.5%. We've got a range of banks here. Shinali, we've got B of A, got JP Morgan, Wells Fargo, Citi ahead of us. What does all of this tell you about what we might see from Citi?
I think trading is going to be a tough thing to look out for Citigroup. I think the reason that is so important for Jane Fraser is because as she pivots this bank, she wants to show that even though she's building wealth, she is she's kicking it in trading businesses. This is a talent story. This is a time the buy side is growing. The global picture for rates, currencies, commodities has been a killer business for Wall Street. And so she wants to show some winning there. The place that Jamie Dimon at JP Morgan said they were weak at was securitizations, really. So that is where the fixed income business is weak. Again, I will have to bring up what kind of headcount reductions would we see on the back of weaker businesses?
This is a question for Gerard Cassidy or Ken Leon. These guys are steeled in this, but I'm going to go to you on the more social aspect of this. Is there room in America for 4 big banks?
Yeah, absolutely.
5 big banks?
Well, you have to remember...
There's room for Citigroup here to struggle and try to catch up over 15 years from the great financial crisis.
I think you have to watch how these banks are changing because a lot of these banks are not the banks that
Is Citigroup a big bank?
Citigroup is becoming a big wealth manager. Did you used to call that a bank before? I mean, these are not companies that are lending to homes across America anymore. And you have to ask yourself, as European banks get really weak, do these banks start to find assets to buy there, a chance to grow fairly cheaply at a time where the market there is down?
Ken, you get the final word here. Ken Leon, favourite part of the equity market in 23. What is it?
We're going to see a brighter outlook for 2023 for the banks. That's a changed story from where we were before.
You're not alone. I've heard that from a few players, Ken Leon there of CFRA. Yeah. I think it was Savita Subramaniam of Bank of America who said these are not your mum and dad's banks. They're much more defensive, completely different, going into a recession if we do have one, because I know there are some different opinions of whether we might get one in the United States. If we do have one, there are people out there that think these banks do okay.
Dead on. And the guy that was way out front on this, I have to give credit to Charles Peabody, who's an incredibly thoughtful bank analyst. Gerard Cassidy, was way out front on this. You're right, John. These are changed beasts. And I think one of the problems we have, and frankly Washington has, is the size of these companies. I'm trying to always bring ratios into this. I don't have them in front of me right now. I can't look smart. But can we keep in mind that the total assets of J.P. Morgan published is $3.7 trillion. And you can add them up on the 4 here, but I think one of the great canards of financial media is to not explain to people these things are huge. John, what is the employee count of J.P. Morgan? I mean, it's not Walmart, but it's 288,000 people.
Yeah.
It's
a lot of people.
And I just think there's not. I'm sorry. To me, they're almost hiding profit here. They're and granted, they got the worries you talked about. They're really worried about slowdown. Mr. Dimon, I'm sure, will address this today among the others. But the real issue here is they're literally hiding the boom they had in the fourth quarter of this year.
The stock's a little softer, lighter in the pre-market. The overall equity market's down about 0.4%. There's another name to look at this morning. It's Tesla. It's down a little more than 5% in early trading. I'll bring you some Southside research in a couple of minutes' time. From New York, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. In Germany, the economy probably stagnated in the fourth quarter. That's easing fears that the war in Ukraine and inflation have triggered a recession. For the year, GDP rose 1.9%, just ahead of the estimate in a Bloomberg survey. President Biden's handling of classified documents erupted into a political crisis with potential legal repercussions. A special counsel has been named to investigate. Meanwhile, the White House has confirmed that a second set of documents was found in a garage storage area in the president's home in Delaware. Japan's Prime Minister Fumio Kishida will seek public support from his new security strategy today from President Biden. The two leaders will meet at the White House. Several weeks ago, Japan announced a radical upgrade of its security policy. It includes a 60% spending increase and plans to acquire missiles capable of striking China. Tesla is slashing prices in the U.S. and major European markets after several quarters of disappointing deliveries. The electric car maker lowered the cost of its cheapest Model Y by 20%. Buyers can save as much as $21,000 on Tesla's most expensive vehicles. And the only child of Elvis Presley has died. Lisa Marie Presley had been rushed to a hospital in a Los Angeles suburb Thursday after suffering cardiac arrest. She was a singer who earlier this week appeared at Graceland, the mansion where Elvis lived in Memphis, Tennessee. Lisa Marie Presley was 54. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
As inflation is coming down, take-home pay for workers is going up. Workers' wages are higher now than they were 7 months ago, adjusted for inflation. Wages for lower-income and middle-income workers have gone up even more. It all adds up to a real break for consumers, real breathing room for families.
That was the President of the United States on the latest inflation numbers in the last 24 hours. Your equity market looking a little something like this morning. Good morning to you. We are negative by 0.4% on the S&P 500. Yields are a little bit higher by 2 basis points on a 10-year, in and around 346. The banks to look at this morning, you know them so far. The numbers from JP Morgan, Wells Fargo, B of A behind us. The one out here that I think we're all looking at is JP Morgan, down by about 2.3% in the pre-market as the outlook.
It's the outlook, yeah.
Net interest income outlook misses estimates. We'll build on that story a little bit later. Ken Leon's going to come back from CFRA in about 40 minutes, and we'll talk to him about the financials when we get Citi. Outside of that, I want to talk about Tesla. Tesla with some price cuts. I mean, we're talking not just 5%. Not 10%. We're talking about 20% price cuts in Europe and in the United States. Tesla's down about 5%. I promised you some Southside research. Here's some from Wells Fargo. Tesla likely to lose its tech-like valuation. Tom, that's the problem. They say this over at Wells Fargo. There is growing debate among institutional investors on how to value Tesla, auto, or tech. Their price target gets cut to 130 from 230, so that's a big price target cut, but still this stock's at 117.31. You want a bullish view, Tom? Dan Ives, Wedbush, still outperforming the stock, says this: we believe altogether these price cuts could spur demand deliveries by 12 to 15% globally in 23, and shows Tesla and Musk are going to be on the offensive to spur demand in a softening backdrop. Yeah. The question is, Tom, who else is going to join them?
TV, turn up the volume, and radio, good morning to you. John, estimated PE off the Bloomberg. Tesla's still rocking just above $100 a share. A 30 PE multiple. Ford, GM, 7 and 5.
Yep, there you go. That's the story. So where does it fall? Does it gravitate towards them?
Oh, where's the surveillance cork? Oh,
you're not going to speak.
They were banned. I'm not going there, John. You know where I stand on this. You're busting my chops. But all I can say is the stock is well behaved in a southern direction.
Down another 5% this morning. We'll keep you up to speed on some of those price moves.
Anne-Marie Horton does not drive a Tesla. She's our Bloomberg Washington correspondent, which means she always takes Ubers and Lyfts in Washington and joins us this morning. If you were to Uber, Anne-Marie, and I think a huge political story not reported in the oddities of January after a midterm election is Virginia. And if you go south to Virginia Beach, it is one of the great purple areas of America. And the governor of Virginia, I believe, had a modest defeat over the week. And this is this Republican to Democrat, Democrat to Republican tilt. That infects every conversation in Washington, doesn't it? that going forward to the 2024 election, it's very purple out there, and importantly, purple out there.
Well, first point, Tom, no one wants to see me behind the wheel. I can assure you that. Second point, it's true. You're going to hear names like Youngkin, like Sununu, obviously. Also the likes of, as we talked about a lot, the governor of Florida. Because we go into 2024, the Democrats and the Republicans are trying to figure out who is going to lead the party. Obviously, for the Democrats, it's a little bit of a different situation because they are in control of the White House, and President Biden has, or his chief of staff, have pretty much said that he will be announcing a presidential run for 2024. But now that the Republicans have kind of put the former President Trump in the back seat, and his campaign, I know he's going to be doing something at the end of the month in South Carolina, but his campaign has almost kind of evaporated. It really has become to the back pages of the news. You're going to hear the likes of a Glenn Youngkin. And it is important because of his proximity to Washington, D.C. People pay attention to Virginia.
With your encyclopedic reading, and folks, Anne-Marie's doing this 24/7. We bust her chops about it, but she's got the zeitgeist going in Washington. What is the Republican response to narrow Democratic victories like this small election in Virginia Beach the other day? Do they go with the names you mentioned, or does MAGA still have a value in the Republican Party?
I think it remains to be seen what they do for 2024, but I think it was on display that MAGA has control of the Republican Party in the House of Representatives, where you saw 20 individuals that are very conservative, some of them incredibly conservative, fringes of the far right, basically hold the speakership hostage for days because they wanted concessions from Kevin McCarthy, or frankly, they just didn't want to see him being the speaker because they feel like he doesn't have those conservative values when it comes to ideology. So you cannot say that these, even though if you look at the broad spectrum of America and who would make more sense for 2024 in terms of making sure you get those moderates and independents to vote, which basically swing the election regardless of who it is, the fact of the matter is there is a massive control of these far right in the Republican Party, and they've been dealing with it for years, since 2011, since 2015, but we saw it on display just last week.
MH, let's just talk about the former president just for a moment as well and his campaign. We asked some questions over the last couple of weeks, just what was happening with that. How's that shaking out at the moment?
Well, we know that he's going to be doing some sort of campaign event, not a rally, but he will be doing some sort of campaign event at the end of the month in South Carolina, which will be key for the Republicans in terms of 2024. But besides that, there hasn't been a lot from the former president. Obviously, he had his Nifty deal, the NFTs, yes. Then he also is on Truth Social. He's obviously come out and lambasted what's happening with this president in terms of classified documents, but they haven't had these huge rallies. There hasn't been main fundraising events for him, and pretty much it's a campaign, what it feels like, a campaign in name only.
AMH, thank you. Anne-Marie down in Washington, D.C. A campaign in name only at the moment. Anne-Marie's words down in Washington, Tom.
I was fascinated by these elections, and I read very briefly on the Virginia Beach story, but all my focus with our wonderful Greg Giroux, who's just encyclopedic on this, are on these smaller state elections are off the media's radar that are purple. And it's fast. I have no idea how that's going to cut, but that's where my study is.
If you are just tuning in, let's run things through for you, or run through things for you.
You nailed that. You sounded like me.
That. Got to learn how to talk again, Tim.
Yeah. Well.
Equity futures down about 5 or 0.6% on the S&P. My apologies for that. Your bond market yields higher by about 2 basis points. Let's call it 3.46 on a 10-year at the moment. I want to talk about a couple of names. Let's start with the banks. JP Morgan, Wells Fargo, Bank of America. I think if you wanted one broader story this morning, Wall Street banks preparing for tougher times ahead. Whether we get those tougher times, though, I think is a completely different question, and that's the question we're all having in broader markets, the debate we're having every single day. Do we get a slowdown, a recession? Do we get a recovery, driven by what's happening in China, in Europe and elsewhere as well? And Neil Dutter of Renmac, who's been saying this repeatedly, over and over again, week after week, what slowdown? We've had a re-acceleration in the last quarter of 2022. Beyond the banks, I want to talk about Tesla cutting prices 20% in Europe and in the United States to try and boost demand. And Tom, you mentioned this, Ford, GM. If Tesla's going to go 20, who goes next?
I don't. I mean, I think that's so convoluted. Our wonderful Detroit team can really tell us about the product mix in EV. I'm just flat out not up to speed. Torsten Slok with us yesterday, publishes moments ago, John, and this really folds into the Dutta view. Slok, Apollo. Combined with continued solid job growth and robust wage inflation, the bottom line is that there remains a powerful tailwind in place for U.S. consumer spending. I would suggest into this weekend in our reading, that's a percolating idea.
That's exactly what we hear from Neil, and that's exactly what we're hearing from other people. And the people that didn't share that view a month ago
are shifting.
They're shifting, and why are they shifting? Because this market's shifting. The market's setting the tone for that debate, Tom.
The market is out front. I mean, the market's always out front of this. I mean, you know.
As we're talking, though, equities are rolling over. We're down about 0.75% on the S&P 500. Citigroup numbers about 35 minutes away. Shinali staying close. Ken Leon of CFRA coming up a little bit later from New York. This is Bloomberg. Live from New York City, equities down 0.75% on the S&P 500. On the Nasdaq, we're down about 0.8%. Just equity softer here off the back of bank earnings this morning. So let's talk about those bank earnings and the outlook as well. The outlook critical for stocks like JP Morgan, down about 2.63% in the pre-market. The outlook for net interest income. Bank said it expects about $73 billion for NII in 2023. The estimate was $74.4 billion, preparing maybe for tougher times ahead, Tom. We've seen that reserve build across the banks this morning. B of A down about 1.4%, 1.3%. Wells Fargo down by 3.7%. But both Wells and JP Morgan setting the stage for some share repurchases, Tom, through the year.
The share repurchases, I think, speaks to the prosperity of the moment. But, you know, in their defense, and I think the conference calls will be fascinating and really hearken, John, to the entire earnings season. People are really going to have to lean forward and get the nuances of where are we in May? Where are we in August? We don't have a clue. They don't have a clue.
Where are we at the end of the first quarter?
Oh, yeah. Well, that's the Ferro,
where are we at the end of
March outlook.
I've got no idea at the moment. I don't think many people do either. Let's talk about Tesla. That stock's been hammered over the last few months. Tesla in the pre-market right now is down another 5.63%. Waking up to the news of more price cuts in the United States, in Europe. Price cuts of 20%. Tom, that stock at 116 and down by 5.6%.
Bears incredibly careful analysis. And forget about the Musk soap opera, folks. Just on this simple case of who owns it and the index funds that own it, that's going to be painful with a continued glide south. I'm not going to pontificate of whether we're going to see $99 per share. That would be rude. So, you know, that's where we are. John, futures at -30. Dow futures -95.
That stock, Tesla, down by 67%. Off the April peak. That is quite a move. We'll bring you some more on that a little bit later. The latest inflation data showing that inflation continues to cool in December, leaving investors questioning the Fed's path forward. Lindsay Rosner of PGIM Fixed Income weighing in, saying the following: the report is consistent with our expectation for a 25 basis point hike on February 1st and a final hike of 25 basis points on March 21st to bring the peak policy rate, Tom, to 4.75 to 5%. How attainable is that 5 handle is the question we're still asking.
This is a really, really important conversation. We don't do this enough. This is sort of what afternoon TV and radio do. It's not the province of the morning. But we're going to do it because this weekend across this nation, a huge body of the nation is going to reallocate their retirement plan disaster. Lindsay Rosner is a student of this, a CFA, a small college in New Jersey. She darkened the door on years ago. And Lindsay, I'm going to cut to the chase. PGIM, Greg Peters, and everybody else in the industry is picking up the pieces from a complete disaster of 60-40 allocation, 60-30-10. And what PGIM does, and I don't mean to pick on PGIM, but core this, core that, core the other thing as well. How do you reallocate after the debacle of 2022?
Right. Well, I think you're right. It was a debacle in 2022. Nobody can deny that. But I think what we've got now, we know what this painful journey led us to, is an unbelievable opportunity in the fixed income market. You actually have an opportunity to do the right thing and the safer thing. We've been in a world for so long where the requirement to get any kind of return was to go out the risk spectrum. You don't actually need to do that now. You can get 6-7% yields in high quality assets. So I think the allocation, and I'm biased as a fixed income manager, is bonds.
I mean, I think, Lindsay, what's so important here, and of course you on the high ground of this, let's call it CFA level 3 territory, folks, where your eyes glaze over. But the bottom line is, do our listeners and viewers want to manage more towards an index fund with an R-squared of 0.9 or even higher, or do they want to get a little more supple and flexible this year? Not like something like Cathie Wood's ARC, the train wreck that is, but do you want to be a little more active this year or indexy?
You want to be active. I think we say we love bonds, but we don't love all bonds, and neither should you. This is a year of security selection, especially as we face a recession. There will be winners and there will be losers. And you need an active manager to sort that out for you.
Well, let's talk about that right now, Lindsay. Let's have that discussion. What are you looking for? What's on the list?
So things that we really like are high quality structured product, great credit enhancement there, that even if you have problems in, for example, some of the underlying loans in a CLO, you're protected. Also select names in corporate world, investment grade and high yield. There's a lot of opportunity to be had, a lot of yield, but you need the resources to analyze the balance sheets.
Let's go through high yield then. So I'll bring up high yield spreads more broadly, and you can go a little deeper and tell me what sectors, maybe even what names you're looking at. High yield spreads have come down to about 420. Lindsay, this is not for your benefit, it's for the benefit of our audience that might not follow this asset class. But the wides a year ago, the wides back in the summer were 583. So we've tightened a tremendous amount at a time when people are trying to figure out if we're going into recession or not. So what do you like in that lower quality cohort of US corporations?
Yeah, it is really name specific. And for example, there are some in the higher quality, I know you're asking lower quality, higher quality fallen angels that we think become those rising stars. But then it is names, specific home builders we really like, which kind of sounds crazy with mortgage rates where they are. But it's about picking those out. And I think the key thing is that the default projections are extremely low. The recoveries are higher, probably going to be higher than they were historically. These are all good things for high yield writ large, but you got to get those names right at these tight spreads, to your point.
Yeah, Greg emails in from New Jersey and says, Greg wants to know, Lindsay, are we clipping coupons or are we going for total return this year? Help Greg out.
I try to. That's part of my job. We can clip coupons. We've got a ton of spread if we just stay static. But you're in a case where we are a total return manager. So we're going to keep looking for opportunities. Is that helpful to Greg?
Yeah, that's very good. You nailed it. Okay, let's keep this going. Well, folks, you don't see this on radio, but behind Lindsay's all of the Nassim Taleb she's read over the years. I'm sorry, the world's changed. You know that. All of a sudden, the Sharpe ratio matters as well. Our viewers and listeners have to deal with a new cost of money. I get it that bonds are the place to be, but what's the recovery line back to 2020 or 2019? Do you and PGIM have a 3-year vision to get back, or is it a 5-year vision to get back?
Yeah, it's longer term, right? We're longer term investors. That's what we do. I think a lot of people are quibbling right now is GDP, for example, in the U.S. next year, 0.3, is it 0.6%, is it 0.5, and they're going to change it potentially even on the print we had yesterday. Let's pull the camera back and think long term and buy the right companies, the right collateral that's going to do well, and pick the spots that are going to have the right kind of recovery.
Can we talk about allocation to bonds from a cross-asset portfolio construction perspective, Lindsay? People may be looking to allocate to bonds back into that traditional 60-40 this year, and I think we're still trying to figure out what snaps that positive correlation between risk equities and between traditional fixed income, say sovereigns. Do you think that breaks this year? And Lindsay, why do you think it does break? What leads to that?
Yeah, I think it goes right back to what Tom just said, which is we had 2 black swans. We just had COVID and we have a land war in Europe. So those are things that when you're looking at a theoretical model, black swans aren't part of it. And we had a very much black swan style year. While we certainly want to think about the risks or the unknowns, but I think we're going to enter a more normal time. And that's important. And that's where those correlations you've historically studied come back into play.
The challenge to that view, if I can provide it, and I'd love your comment on it, the same reasons that we're seeing equities in emerging markets rip, copper rallying aggressively, European banks up a lot, are the same reasons I think you could make the argument that yields should be higher, that we're seeing a more resilient economy than expected, that these central banks will have to go further, the ECB being one of them. We will get that growth impulse off the back of China reopening. Lindsay, why doesn't that result in better risk profiles, equities up, credit spreads tighter, but also treasuries going lower and yields still going higher from here through this year?
Yeah, I think you're bringing up the risk case that is not priced in. So what I think is pretty incredible, if you just look at what's implied in the forwards for February, the forwards are saying the Fed's going to hike 27 basis points. And this is the way I'm answering your question. I can already answer it another way as well. But 27 basis points is saying that everybody knows what the Fed's going to do. And they know what it's going to do going forward. And despite what it's telling you, they're going to pause, they're going to cut. Why are we so confident now? Everybody was wrong last year. And so I think your point of that risk of inflation actually being more persistent, the economy being more robust, China fueling the economy, which is inflationary, that is a concern. We can't deny it. The Fed can't be on autopilot cruise control. And by the way, neither can investors.
Lindsay, this was great. Just fantastic. I'm not sure what's happening over at PGIM. Why do they have such a fantastic lineup? Lindsay Rosner, Mike Collins, Greg Peters.
You seriously want to
Robert
get me
Tipp.
going on this? Prudential.
What a fantastic team.
Walter Cronkite used to come on 50 years ago, brought to you by Prudential, whatever, the voice was. And PGIM came out of an insurance company that just always led with academics. And when you line up the PGIM people, and no one in the industry is surprised when they won every Morningstar Fixed Income Manager of the Year award.
A couple of years back.
I mean, nobody, it's like PIMCO. It's academics first. Rosner is simply lights out. She's Princeton University, CFA. She's the real freaking deal. And that's what matters. I mean, you got to have the intellectual context there. I mean, Greg Peters is lagging behind a little bit, but that's
he's going to catch
story.
up. He's going to write. He's going to catch up.
Do you have him in the 9 o'clock
he'll
today?
Catch up. No. I think he's interning for Lindsay.
Yeah, well, it could be. That was brilliant, folks. That's what you need when you're saying to yourself, "What do I do with my 201k?" I talked to John Tucker this morning.
It's a 201k now.
It's a 20. Tucker's back to a 201k
after last year.
He says, "Tom, can you hold my hand while I open the envelope?" And then we're going to do that.
Well, you joke about that. I wonder how that's gone down for a lot of people. How they've experienced that in the last 12 months.
John, I've extended my retirement date out to 2030.
I don't think you're alone. You're going to be around that long. Another 8 years.
Well, I don't know.
7 years.
Shonali's in the way of my walker here. I can't get to it on the break.
Let me grab it for you.
Oh, thank you, dear.
I always say I'll be the first one to go before you. You'll be the last one standing.
Lisa's where is Lisa? What are we doing with Bramo? You were like doing a high yield.
Bramo's skiing.
She's skiing.
You keep saying that we're on assignment whenever we take a day off, but Lisa's skiing.
Bloomberg reports.
Lisa, I don't know where she's skiing, but Bramo is skiing. She's quite a keen skier.
She does those helicopter things. She goes up
you drop off and then you go off piste.
They drop piste. Is that how you pronounce it?
You go off piste and then you.
Oh, that was paste. I'm sorry.
No, you go off piste.
Okay.
And then you know.
Derby, Manchester.
Manchester Derby this weekend. North London Derby this weekend.
The Blues have to be favoured, right?
When are we launching our sports podcast?
I think we're doing it Sunday.
When are we doing that?
We're doing it Sunday. Important Derby. Mr. Levy and all, thank you for the ticket offer. Really appreciate it. I don't think we're going to be there.
Should we do a Twitter Spaces as that game is on?
I don't know
what
that is.
Would you like to do that? Schnally does those.
Spaces?
Schnally does those.
I do.
We should do one of those.
Do you do Spaces?
I sure do.
You should go on and we'll just sort of chat and people can drop by and listen in.
How social.
They can take our commentary instead of the commentary on Peacock and NBC. John and Rochester of Nomura coming up.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. In Alabama and Georgia, violent weather killed at least 7 people. Much of the damage took place in Alabama, where a tornado cut a 20-mile path across 2 rural communities. 6 people were killed and more than 36 homes were damaged or destroyed. China's exports keep falling and global demand continues to drop off. Exports in U.S. dollar terms declined 9.9% in December from a year earlier. That was better than expected performance. Still, it adds pressure to an economy that's trying to recover from COVID-0 restrictions. The FAA is out with preliminary findings on the computer failure that grounded all departing U.S. flights on Wednesday. The agency says it was caused when a data file was damaged due to a failure to follow government procedures. Now, according to the FAA, unspecified personnel were responsible for corrupting the file. Delta Airlines is forecasting first quarter profit that fell short of Wall Street estimates. That's a setback for the carrier's efforts to capitalize on a rebound in air travel demand. Delta is being hit by soaring labor costs. And a big pay cut in the works for Tim Cook. Apple is reducing its CEO's compensation by more than 40% to $49 million this year. The company is citing investor feedback and a request from Cook himself to adjust his pay. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
The Fed's policy has been able to keep inflation expectations under control and has returned inflation expectations to levels consistent with the 2% inflation target. And I'm now expecting actual inflation to follow behind.
That was Jim Bullard of the St. Louis Fed. So we've got the Boston Fed, the Philly Fed, teeing up 25 basis point hikes. And Jim Bullard comes out and says, yeah, that 5% number, let's get there like tomorrow, Tom. Tomorrow. Why wait? Unreal, isn't it? You're speechless.
Unreal, and was it better decades ago when there was less regional chat? And I would be honored to sit with the PhD from Indiana. Huge respect for Jim Bullard. He really made people think with an important research paper on regime change, I'll say a decade ago. And the bottom line is, John, review this. Bullard was moving us up 5, 6 headlines of 7%. And now we're managing the message down to 5.x%. Is that
That's
the
in their
job?
Projections. That's in their projections.
Okay, I think, yeah, McKee would say it's in the dot plot, you know.
It's in their dot plot. Look, the difficulty they have at the moment is that they are looking at the data, it's coming their way, seeing some disinflationary trends emerge. Unemployment's still pretty steady at 3.5%. The labour market is arguably looking at the data pretty tight. And they're trying to wonder out, Tom, whether they need to be tighter to keep financial conditions tight or whether they can just settle on right where they are, another 25 basis point move and pause.
Our audience is cruel. You know,
what are they saying?
I get all the hate mail, but, you know, and we've got a guest coming on right now who's perfect for this.
I can always tell when you're distracted and aren't following anything I say.
I'm looking at Twitter Spaces with Shanali.
Okay.
Ben Twaden's here, and he puts us out with our title for our soccer thing. Soccer for Dummies is what we're going to call it. Thank you for that. It's really good to know. And, our first guest can be the guest right now.
There's another tweet here as well. Bloomberg TV would get pulled over for drunk driving every morning without Ferro acting as the designated driver.
Got that right.
You think that's the only reason I'm here. Equity futures right now on the S&P, negative 0.8%. Jordan Rochester over at Nomura had this to say on the euro. We've seen some real dollar weakness come through in the last couple of months. Here's the quote. Expect better European data, inflows, terms of trade, falling US CPI, and more to boost euro dollar, Tom, towards 110 in short order, 116 by year end. Now in mind.
Euro-dollar there. We'll get to that in a moment. Right now, important to speak to Mr. Rochester of Nomura here about what will be the study over the weekend. He has to be delicate. He is with Nomura, a Japanese bank. Jordan, it is just flat out there, suddenly, the death of yield curve control. Explain the ramifications for global Wall Street ex-Japan. If Japan gives way, if the Bank of Japan has to somehow normalize rates, what's it mean for the rest of us?
It means a lot, Tom. If you think about what Japan's done, they've had quantitative easing for over a long period of time, much more than what we've had in Europe and in the US. So first of all, those carry trades that are built up over the better part of a decade or longer could be unwound. And it could lead to fixed income markets having a tightening in terms of credit conditions. And therefore, it's not clear how risk sentiment would do well if they were to suddenly abandon yield curve control. Number one, how does the local market handle it? How much do JGBs sell off?
Right.
Is fair value around 85 basis points? That's a significant daily sell-off. But you know what markets are like in these sort of shock scenarios? You can get a sort of non-linear market reaction. Then it feeds through to US Treasuries. One of the largest buyers, one of the largest holders of US Treasuries outside of America is Japan. So how well do Treasuries handle the Japanese having tighter conditions, higher yields in Japan, making US fixed income less attractive? the sort of answer is it would lead to quite big sell-offs, I think.
Because the sell-offs here speak volatility. Ben Emmons over at Newbridge talks today about China exporting disinflation when you work through the dynamics. If we work through the dynamics of the end of the Kuroda experiment, does a much larger, healthier Japan export disinflation or the opposite?
Well, the world's very much globalized. Let's walk through the sort of path of how that could play out. What we're seeing is the first chance in a long time for Japan to have animal spirits and to escape the trap of deflation. We're seeing huge pay rises from certain retailers. The big headline for me this week was Uniqlo, the 40% pay rise, the first time they've raised pay in 20 years. 40. That's a massive number across the board. We're seeing other companies doing big numbers, but much less extreme, like 6% or so. The shunto, it's called, the wage negotiations, they all come up to us around March time. Do we get big pay rises overall for the whole of Japan? Then we could see inflation become a bit more of a topic that Japan's not had for a long time. What does that mean for the rest of the world? It means that we have one of the last few central banks doing quantitative easing coming to an end, if that was to happen.
Well, Jordan,
it's not our base case, but it's something to watch out for and a big risk for this year.
You've said it. They see it as a once-in-a-generation opportunity to reset inflation higher. We see it as potentially a policy mistake on the horizon. And, Jordan, they've got to figure out what kind of policy setting is sustainable. Now, I thought that was the effort just a month ago. And now there's a conversation about maybe renewing that effort in a week's time. Jordan, what is it?
Well, the base case from us is that we shouldn't get much of a change next week because of these risks we've talked about. But there's a trade-off for the central bank, which is, are the benefits of yield curve control, which are leading to Japan having to do massive amounts of quantitative easing to defend that target, are they working against the potential positives from it? So are those positives becoming negatives? So let's just bear in mind, Japan is experiencing inflation. It's nothing like Europe or the US, so it's still quite low compared to our standards, but it is high for Japan's standards, and we're having wage gains. So is the yield curve control, which is forcing them to do quantitative easing, working against the idea of inflation going up, and therefore maybe they should tighten? That's the problem of the policy. That's the bind they're in. It's just how quickly do they exit it is the problem for markets. There's some speculation it could happen as early as next week. Hence, we're getting these big dollar yen moves. For us, it's a little bit too soon. We've got a new governor coming up. The new governor will start probably from April onwards. But it is though the risk for next week, another surprise from the Bank of Japan. And that's why for us, it's just easier to have a short dollar yen trade on rather than talking anything specific about on this date this will happen.
Well, it's a break of 130 right now. We've gone from 150 to a break of 130, 129, 128. That's dollar yen. Cable's gone from 103.50 at the lows at the end of September all the way back through 120. Euro dollar's gone from 95 through 108. You're looking for 110, 116. Jordan, can we just sit on this just for a moment? What did the FX community get so wrong at the end of September? I remember the conversations we would have. We were talking about parity, perhaps, on cable. We got close. Euro dollar, getting used to life below parity. Look at us now. What changed, Jordan?
I don't miss last year at all, John. It was doom and gloom. And I really didn't enjoy being right. So we got the euro dollar view right, got the cable right. We had a really good year in terms of P&L on our trades. Gloom, it was recession. It was European energy prices spiking to unbelievable heights. The trade balance of the euro area collapsing for the first time in a generation to levels that were wider than the US in terms of GDP. What's changed, John, is we've had a few factors work in the euro area's favor. Number one, we've had energy prices collapse. That has been a massive tailwind for industry. It's allowed all those steel, chemical manufacturing plants to turn back on production. It's why we're seeing European data start to improve. Number two is thank you, Mr. US. US inflation's now decelerating. We could have goods deflation this year. That is a very different story to last year when US inflation was accelerating and the story is about how much hikes will the Fed do. Now it's about when will the Fed stop and when will they start to cut. We think from September this year. So I think a lot's changed on the ground in terms of facts. And then the third factor is China reopening. That's the new one. China reopening is a bigger deal for Europe than it is the US. US exports to China is less than 1% of GDP, 0.67% to be exact. For the German economy, it's more than 3 times more important. It's around 2.67% of German GDP, just exports to China. Your biggest trading partner reopening its doors, opening up its tourism flows, makes Europe so much more attractive. Now, with those energy story and that inflation story in the US too.
Hey, Jordan, thank you.
Jordan
Rochester,
McClintock, thank you.
Of
Just
Nomura.
superb.
Tough time for FX over the last couple of months. What a change in trend we've seen.
What he described there, and this is, you say to yourself, how do saxophone players get hired at these big fancy banks?
He is a saxophone
player. What you heard
player.
there on Japanese dynamics is PhD level dynamics. That's what all these people do, whether it's Jordan Rochester, Sarah Vallis, or the giant Steve Englander over at Standard Chartered. And the answer, John, is people go, okay, so what of yield curve control in Japan? It's 12 hours away and I haven't been to Tokyo because of COVID. It really, really, really matters. And those dynamics impute across the time zones to us.
If anyone was wondering how saxophone players get hired at banks, Tom, that was a key question for me this morning.
Yeah, no, he did.
You know, my favourite hiring story, Greg Peters, you mentioned him earlier, hiring Andrew Sheets because he liked extreme frisbee and could draw cartoons.
Well, that's a Brown University thing.
Isn't that the greatest
Sheets was in
hiring
Brown.
story?
Sheets spent the entire time at Brown in pizza parlors wearing Birkenstocks.
Is that right?
That's right.
Okay. From New York, this is Bloomberg.
We could still avoid a recession.
I think the real story starts around the second quarter of the year when we start to see if inflation can meaningfully and easily push through that 4% barrier.
We should expect to see the Fed begin to cut rates, maybe not in the third quarter, but definitely, in my view, in the fourth quarter or going into next year.
If a year from now inflation is too high and inflation expectations are too high, the Fed will see that as a policy mistake.
The long lag, variable lags of Fed policy, it's still working its way through the system.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Good morning, everyone. Jonathan Ferro, Lisa Abramowicz, and Tom Keene. We welcome you on a bank frenzy. We've heard from early banks, and now we hear from Citigroup as well. We do this futures negative 34. JP Morgan a little off the mark. Solid earnings, and then the view forward for Jane Fraser. John, will be a mystery.
Well, let's talk about the earnings so far for Jane Fraser and Citigroup this morning in the fourth quarter. We can start with investment banking revenue. That comes in lighter, $645 million. The estimate, $722.4 million. Going through the earnings release, this on equity sales and trading revenue, $789 million. The estimate, $930.6 million. FIC. There's a beat, $3.16 billion. The estimate, $2.81 billion. Advisory revenue, $269 million. The estimate, $340.8 million. If we can look at the share price, the stock down by about 2.2%. Shanali Basak, our Wall Street correspondent, alongside us. Shanali, your thoughts on these numbers?
A few things for you here. Even though you had that beat in fixed income trading, we wanted to see it. It's good news for Citigroup. There's a lot of things here that you have to pay attention to. One of them being the fourth quarter return on tangible common equity of less than 6%. Now compare that to the other banks. That was 20% over at JP Morgan. Comparatively, that's less than 6% over at Citigroup. So the challenges still remain ahead to turn profitability there when you look at Citigroup. Revenues increased a mere 6%. From the prior year, 5% when you include divestitures. But remember, this is a bank that's still in the middle of a turnaround story. You are not seeing that stock react positively there. Remember, Citigroup has been trading very, very sluggishly lately. It's at about half of its book value when you look at how its performance has been moving forward.
The profitability here, and Jane Fraser's how long, a year into this?
More than that now.
More than that now. How do you adjudge, and the experts you speak to, how do they adjudge her timing of change strategically and tactically at Citigroup? What's her timeline?
She has years ahead of her, and part of that is because they're still dealing with regulatory challenges. You know that Citigroup, the technology issues that they've had has been a decade plus old, and it's led to some serious mishaps when you look at some of the trades that have gone awry when you look at Citigroup. So she has a technology story to turn around, she has a regulatory story to turn around, and she has a global footprint to turn around. And that's where she has already made a lot of progress by exiting a lot of business lines in some areas that don't make sense for Citigroup anymore.
Overall revenue, $18.01 billion. The estimate, $17.96 billion for the fourth quarter. Shanali, looking back beyond the fourth quarter, the whole year, it's a pretty decent year for Wall Street banks. Looking ahead to the year ahead, I've got no idea what 23 looks like. like?
You have to ask yourself where the money comes from, because if margins are under pressure, you still see pressure upward on headcount, down on pay, but up on headcount. You still have to ask yourself, if JP Morgan is bringing in less money than expected, more money, but less than expected in net interest income, how do they please Wall Street? How do they please their own investors as they try to invest in these businesses? This is becoming a hyper-competitive share gain here in a market that is not growing as meaningfully as would warrant.
I just looked at the FA screens in the Bloomberg, and I think we need to frame the size of the banks and the relative size of the banks. Wells Fargo is obviously a different story with a huge restructuring off housing. Citigroup, on a quick ratio of operating income or net income, I can't remember which, is basically 40% the size of JP Morgan. How does she get critical mass at Citigroup to compete? I don't get it.
One thing to watch, both for Citigroup as well as, frankly, for Goldman Sachs on Tuesday, is that focus away from traditional banking into asset and wealth management, particularly wealth management.
So she wants to do a Gorman. Why doesn't she just merge with Morgan Stanley and move on?
Well, they're too big. And the reality is that's where I'm giving you the global story. I think for Citigroup, because they're the most global of the U.S. banks, you have to watch how she gains share in asset and wealth management at a time where the globe is in a pretty tough spot.
So she's competing with Credit Suisse, and particularly the new Credit Suisse, right?
Credit Suisse, UBS, more than Morgan Stanley, which is virtually non-existent globally in wealth.
I'm just fascinated by this. And the traditional way we report earnings, we're 14, 15 years on from the great financial crisis. And here it is on radio. I got my hand up. JP Morgan's here. There's 4 or 5 other banks down here. And Citigroup is down here on the table where we store the Tang. I'm sorry, I don't understand. If I was talking to Jane in Davos or David Weston with Jane Fraser on Davos early next week, the bottom line is I don't get what the mission is at Citigroup.
Can I draw a question also? If I talked about wealth, that is one area. But if you look at this core institutional business here, even when you look back at JP Morgan, it's amazing to see how many misses you saw in the institutional businesses. I'm not just talking about fixed income trading for them. We saw Citigroup beat there, but I'm talking about investment banking. That drop off is way worse than anyone expected when you look at even JP Morgan. And it spells the question, do those things come back? Do they come back meaningfully? Remember, Citi cut some headcount there.
Just quickly, compare the reserves, the build elsewhere, and what's happening with Citi. What's the difference here?
The difference for Citi is the global nature of the business, John. It's kind of as simple as that. If you take a look at it, really what they're accounting for here is not just the American consumer, but when you look at Citigroup, the question of the reserve build, the question of putting it behind you, right? The reason people will think that's a good thing, even for Citigroup, is a lot of those builds come from credit cards. And that credit card business is also a league table game when you look at Citi and JP Morgan.
Citi down right now by 2.9%. The broader equity market down by 0.9%. Citi sees 2023 a modest rebound, Tom, in investment banking and wealth, a modest rebound. Dare I say that's slightly different to some of the outlooks we've seen so far, Tom?
Yes, and I think that after what we talked about with Torsten Slok and Neil Dutta, there's a raging debate into your weekend reading here about what the view is forward. Off the inflation report.
Neil scathing this morning.
Neil, he doesn't mince words. In his headline of his morning note, Mr. Dutta at Renaissance says the Fed outlook and consensus is just ludicrous. He feels they're way too gloomy. I don't think we're going to hear that in the conference calls. But, it's a point to bring up as well. I would think that Davos will go opposite of that, and you'll get maximum gloom at Davos this year.
Then I think a lot of people are tempted to go the other way,
I'll be with Barry in the piano bar trying to survive. Right now,
going, are you?
Yeah, now. Well, we'll see. Ken Leon joins us right now with decades of experience, and he can take us back to the 10-to-1 reverse stock split of Citigroup 14 years ago, Ken, 15 years ago. Can Citigroup and Ms. Fraser, with all of her wonderful abilities, can she strategically and tactically compete with these other banks?
Well, Tom, it's hard work for Jane Fraser because we're in the second phase of turnaround, which is execution. And who do they want to be? They've already announced and are disposing non-U.S. consumer banks. And the question is do they have meaningful scale outside the U.S. to compete? This is a challenge, and I think investors are tired of looking at a stock that's trading at 50% to net present value or to book value. And what that means is that we're going to have to see concrete signs of improvement. It's really tough. She has a change of leadership in the wealth management area, and that gets to Shanali's point about competing with UBS and Credit Suisse.
Again, given the year ahead, is international a positive or a negative in 23?
John, I think it's actually moving to a surprise of the positive. The reopening of China, potentially Europe not getting crushed from natural gas prices. All of a sudden, and for large U.S. banks, the other three large ones, it's about 15, 20% of their total revenue. But for investment banking, that could be interesting as we go into 2023, a little bit further down the road for Goldman and Morgan Stanley. For Citi, though, this is the heart of their business, is really international and having this streamlined network for corporate treasuries. But it's not there yet. They have to invest in their technology platform.
Stocks down this morning by 2.4%. We can go through some of the banks in the pre-market just briefly. Got Citi softer, Bank of America down by 2.5%. Got Wells Fargo down by 4%. JP Morgan down by about 2.8% or so. So negative across the board here. Looking at the financials, the broader equity market down 1%. Just want to finish on this, Ken, just on the international outlook. This from Neil Dutter of Renmac. Tom and I were discussing it just moments ago. Europe is warming up, likely avoiding a technical recession. China is reopening. The Fed is stepping down from an aggressive rate hike pace, and fiscal policy is no longer a drag. The Fed expects real GDP in 23 to slow down to 0.5% Q4 on Q4. He says this, Ken, good luck with that one. Ken, do you agree with that?
I think if you have an environment of not too hot and not too cold, it's a great environment for financial sector, particularly banks, where the expectations are not as high as perhaps other areas that have benefited with a strong bull case scenario. Banks actually are in a pretty good position for performance for 2023 as we see it. And we just want to see it one bank at a time have a more constructive view as we get through the earnings calls.
Hey, Ken, thanks for being with us this morning. For the last couple of hours, we really appreciate it. Ken Leon there of CFRA, breaking down the banks. JP Morgan, Citi, Bank of America, Wells Fargo, all behind us. Looking forward here, Shanali. Next week, Morgan Stanley, Goldman Sachs Tuesday, right? Both of those banks?
Same time, same place. 6:30, both of them at the same time. It will be, their competitive dynamic, guys, is just out of control. Yeah. And that will be something for the ages.
You said the stereotype that Citigroup is international, and you alluded, I don't mean no disparagement, Shanali, but this is a zeitgeist out there that Citigroup leads internationally and JP Morgan and the others don't. I'm not sure I agree with that, in that I look at the total international revenue of JP Morgan, and there's a bunch of statistics on this that nobody cares about. Can I collegially say it's close to what Citigroup's doing internationally?
I think that if you look at JP Morgan, they're the biggest fixed income trading shop in the world, right? So investment banking trading, yes. But it's Asia, it's the Asian consumer here that's weak in Citi's numbers, and you'll see that play out at other places.
I think what I've said here, John, if I walk into a Citigroup branch, I'm not going to get a toaster. I'm not going to get a complimentary toaster.
I'd like some real interest on some deposits, Tom. I hope that changes later this year. Not happening, Shanali.
Like Bitcoin.
Not happening.
Bitcoin.
Tom mentioned this, the Citigroup CEO, Jane Fraser, in conversation with David Weston at Bloomberg's The Year Ahead lunch in Davos. That'll be cool. That's happening on Tuesday. That'll be shown in full on the Bloomberg terminal from 6 a.m. Eastern Time. Live from New York, this is Bloomberg.
Keeping you up to date with news from around the world with The First Word, I'm Lisa Mateo. President Biden's handling of classified documents erupted into a political crisis with potential legal repercussions. A special counsel has been named to investigate. Meanwhile, the White House has confirmed that a second set of documents was found in a garage storage area in the president's home in Delaware. Japan's Prime Minister Fumio Kishida will seek public support for his new security strategy today from President Biden. The two leaders will meet at the White House. Now, several weeks ago, Japan announced a radical upgrade of its security policy. It includes a 60% spending increase and plans to acquire missiles capable of striking China. 3 months ago, Goldman Sachs created a new division to house what's left of its foray on Main Street. And now it's giving shareholders a clearer look at the financials. That collection of businesses, including Goldman's Apple Card, is now a segment called Platform Solutions. Now, it racked up more than $1.2 billion in losses in the first 9 months of 2022. Tesla is slashing prices in the U.S. and major European markets after several quarters of disappointing deliveries. The electric car maker lowered the cost of its cheapest Model Y by 20%. And buyers can save as much as $21,000 on Tesla's most expensive vehicles. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
The last 3 months' inflation prints have been a step in the right direction. But I'd caution that for all 3 months, while the average dropped, the median stayed high. And that's because the average inflation that you see posted in the headline number was distorted by declining prices for goods like used cars that escalated unsustainably during the pandemic.
That was Thomas Barkin, the Richmond Fed president, weighing in on the Fed's next move as several policymakers on the FOMC start to shift maybe towards a 25 basis point hike. We'll pick up on that in just a moment. The broader equity market softer this morning. Good morning to you. We're down 0.9% on the S&P 500. Into the bond market, yields are a little bit higher by 4 basis points on a 10-year, 348.15. If we can bring up the financials just briefly, can I take a look at the banks going into the pre-market, going through this morning and going into the opening bell? Equities look like this, Tom, individually. JP Morgan down by about 2.8%. Wells down by almost 4% now. Citi just out 17 minutes ago, negative 2.6%.
It's going to be interesting to see. We got to summarize this right now. It's too important before we get to our good guest here on the path forward on value equities. John, a guy yesterday acclaimed on Wall Street who advises hedge funds, I can't use his name on air, sent me a blistering note breaking out the disinflationary 6-month trend that we saw in yesterday's number. David Rosenberg, legendary, moments ago, he makes no bones about it. The Fed is doing a massive overreach. And he goes on to say they are in clear deflation mode. Subsets of inflation, John, aren't disinflating. They're moving towards deflation. This is complex into the weekend.
Mike Gapin of Bank of America published yesterday. I'm not sure if you had the opportunity to read the note, but I can show you a quote from it just briefly. He said, the details of the report were constructive. In our view, we see increased risk of a 25 basis point hike in February. But I think this is the line that you'll be looking at, Tom. Over the last 3 months, core CPI has grown at an annualized rate of 3.1% month over month, a significant deceleration from earlier this year. And I think that's what people are trying to look at, Tom, just that deceleration,
right?
Those disinflationary trends that are starting to emerge and trying to figure out how entrenched they are.
And the calculus here is we look at level of inflation, particularly in the media. The president, OMG, 7% media inflation. And as you say, John, correctly, deceleration, the rates of change and the rate of change of the rate of change now are moving sprightly, as Mr. Rosenberg talks about.
How committed are you to the idea that continues, particularly on the good side, with China reopening? I think that's the difficult calculation they've got to make. They're also very concerned, I think, conditioned by history, Tom, back to the 1970s. You can almost feel the weight of that around their shoulders as they make these decisions. They do not want to make a pause, Tom, or for that matter, shift away from 75.50 to 25 if they believe that later this year they get it wrong and have to start making a move again. That would be a major problem.
We're going to move on here in this important hour and really through the morning get you set for the weekend as well. I do want to point out dollar-yen, 128.55. Strong yen off stunning news out of Japan. We'll have that through the morning on radio and television. Joining us now on Value, he's been lonely for a decade. Kevin Holt joins us out of Iowa, out of Chicago as well. Kevin, Value's been a lonely outpost for a decade. Why is now the time for value versus growthiness?
Yeah, so I think a lot of things have come together, Tom. I mean, really, you think about it, since the global financial crisis, rates have been down precipitously until 2020. Then we had a lot of fiscal stimulus put into the system, and now rates are up. The question is, as you guys were discussing earlier, how long will they be up? Will they stay up? But it creates a more level playing field. When money's free, growth was in favor. But you have a lot of trends in technology now structurally that are also kind of maturing to a point where it's becoming tougher for those businesses to kind of, grow through cycles.
Well, Is there such a thing as large cap value? I get the idea of beleaguered small caps and mid caps, et cetera, but identify large cap value by sector or individual name.
Yeah, so I think we're looking at value mainly outside of financials on free cash flow yield, and then within the financials, we're trying to look at normalized earnings. So if you're looking at normalized credit cycles and then kind of normalized net interest income, and we don't like to make expectations on rates going too far one way or the other. So that's really what we're looking at, historical valuations, and trying to discern, mostly within the market, where's free cash going, which is revenue and then margins of these businesses. And again, I'm excited because it's a very difficult environment, has been for the last 3 years. And that we seem to do very well historically in those type of environments when, digging in and trying to figure out what normalized is something that a lot of people struggle with.
Well, forgive me for getting short term, but go with me if you can, Kevin. Can we just pick up a sector and take a look at the airlines? Sure. The airlines year to date, and I'm talking about 8 trading days. Yeah. Some of those names are up 20, 30%. Kevin, what's going on with those names?
Yeah, it's my expectation, and this kind of leads into some of the stuff that I'm concerned about, but I think the market is kind of in a very lofty state at this point in time. You're seeing a lot of irrational trading. To me, that's a sign of a market top. I'm very concerned when you see stocks up irrationally 20, 30% in a short period of time. I think you're seeing a lot of rotation right now, but I think we're in for a very rough earnings season across the board. And I don't think those, I think it's going to be tough for most stocks, here in the next 3 to 6 months.
Kevin, just on that rough earnings season, you understand the arc of earnings season. It starts with the financials. You get some tech, retail at the back end. Where is it that you think we begin to draw some real conclusions with conviction as to the idea that this is rough and it's going to get rougher?
Yeah, I mean, if you start to look, I think on the banks today, the earnings are sloppy. We've seen a peak in net interest income. So I think that's going to fear investors. Everyone is guiding down or missing on net interest income for the most part. Expenses actually came in a little bit better than I would have thought today so far. But then, your revenue trends within investment banking and trading are very weak. So I think you're starting to see, as you see, that's a sign of what the consumer is going to do. It's a sign of what corporations are going to do. And I think we're seeing revenue weakness. And I think expenses for a lot of areas today, I was actually surprised on expenses so far. I think expenses and wage inflation are going to be a problem for a lot of companies as we move forward.
Kevin Holt of Invesco. Kevin, enjoyed that. Thank you, sir. That's the takeaway from the team over at Invesco on the value side, Tom. Things are going to get tough. Expenses are going to be in focus.
Short answer here is there's value and growth. That's what we were taught. And there was a period where maybe value had a couple years there, but basically it's maybe 1 out of 2 out of 10 years value outperforms. Someone like Lori Calvasina, I mean, she's aged, waiting for value to come on here. And the answer is, okay, maybe this is value's year, spurred by weak dollars, spurred by international, and maybe what that does to mid and small caps as well. But I really wonder about value large cap. The question I wanted to ask him, is Apple a value stock? It's down X%. I don't know. Tim Cook's taking a pay cut.
Yeah, I saw that.
Yeah.
Yeah, if my pay was that, I wouldn't mind that pay cut. Did you see what it comes down to?
He's falling on a sword there.
40-something million.
Mr. Diamond maybe will take a pay cut.
Yeah,
I've offered.
Got some small violins for.
I've offered.
For that. Have you?
Yeah,
We can have a chat about that.
I said, Mike, if you want to starve vet bill, I'll take a pay cut.
You've offered.
Yeah. All Mike said yes.
Well, I'm pleased you've done that. It's very kind of you.
Thank you.
Thank you for doing that for us.
No, this is silly. John, I'm sorry. This is silly where we are with these banks. Look at the size, the billions of their profitability. We can't frame it. It's so big.
Well, we've mentioned this a few times. They're conservative institutions, unsure about the future.
And regulated, as one of our guests said.
You build reserves. That's what you do.
And you're doing it with Michael Barr coming in. This is not Bloomberg Radio Sports Guy. This is Michael Barr, first order academics, and with some real rigor. He clerked for David Souter at the Supreme Court. And the answer is Michael Barr is going to come in as a new regulator on the block. And I think some of the presentation today is with Mr. Barr in the future.
I'm done. Enjoy the long weekend.
I will.
Well, I'm not done, just done with you. And then I'll see you on Tuesday.
We'll see you. Yeah.
We hanging out this weekend, watch some football?
I'm going to watch
Take your
Sundays.
pick.
Sunday's a derby. Or it's a derby.
So you want to watch the North London derby? Yours
Yeah,
and mine. Right, come to mine if you
I'm
want.
going to watch some Swiss football, too.
Bob Dollar Crossmark, Jim Carron of Morgan Stanley, Nadia Lovell of UBS, and we'll catch
Nice
up with
list.
David George of Baird all in the next hour of Bloomberg TV.
Bloomberg Surveillance, 8:29 Wall Street time. We welcome all of you on Bloomberg Radio, Bloomberg Television Worldwide. What happens now? People like Sonali Basak, Max Abelson, and others on our financial team lean into the conference calls. You want to pay attention to what we're doing through the morning. There may be some nuggets there, and certainly each company has a different character, a different approach, and we will see how that goes. Where we are in the banks right now, a little bit of up, a little bit of down as well. Looking out at some challenges. We're going to get briefed right now on that with, futures down a little bit off a buoyant week, to say the least. My number for the week is simple. The VIX has moved. For Global Wall Street, a huge deal, 21, 22, even 23, waiting for the measure of volatility of the S&P 500 to give way. It gave way on the inflation number from 20 down to 19.33, and that's off an 18 shock overnight. So watching the VIX carefully on, I'm not going to call it a bull market, but certainly it's been a January surprise. Not much else going on data. Yields a bit higher, 5 basis points on the 10-year yield. Oil, $84 on Brent, something to think about into the weekend to recalibrate. And on the currency market, very, very important here to see continued yen strength. For those just joining, I want to make clear the Bank of Japan yield curve control theory unravels. We don't want to get out in front of the story. Others have said they will abolish yield curve control. Some say it's under heavy discretion in Japan. I would say the British phrase OBE. They're overcome by events. That's what's happening there now with 3% inflation and the Japanese public challenged by this new pain of inflation. Again, yen 128.43, euro 108. I think we'll move on from there. Euro Swissy, John Ferro focused on the Swiss franc right now. Euro Swissy 1.01. I'm going to call that noodling, which is maybe what we will see over the weekend. Right now, to make us smarter with some really important insight, linking economics into what we see in the financial space, Dana Peterson, of course, her acclaim at Citigroup, she's chief economist at the conference board as well. Dana, are we anywhere near a recession? Brief me into the weekend.
Sure, it's really hard to say. I mean, even though that's our forecast for the early part of this year and extending into the middle of the year, consumers still seem to be spending. The labor market still seems to be strong, especially with huge amounts of hiring in those in-person services and healthcare. But certainly when you look at housing, the housing activity is certainly weakening. We're seeing starts and sales down, and that's influencing pricing, which is actually a good thing. Hopefully it'll show up in rents, in the CPI and the PCE, but it's really tough to say at this point. We need more data.
Okay, we need more data. You sound like an economist, okay? You need more data. Critically, are you going to have the data to adjust dots or to have confidence in trends by the February 1st Fed meeting? I don't buy it. I think what we're going to say is we need data into the spring.
Well, we will have GDP before the next Fed meeting for the fourth quarter. And we're probably around 2% annualized, which is pretty strong ending the year. But a lot of that is because you had very strong momentum heading into the fourth quarter. And also consumer spending was healthy in October. And if you have a good first month in a quarter, It tends to carry through.
Dana, very important question. I mean this with immense respect for your contribution to Citigroup as well. We have executives, CEOs of banks trying to be Dana Peterson. Jane Fraser, she's channeling Dana Peterson. They're trying to guess a recession. What is your advice to mere mortals like chief executive officers managing a strategic message who are trying to game economic recession? Can they succeed?
Well, I don't think it's a self-fulfilling prophecy or they're trying to create a recession. When you look at what the Fed's been doing, I mean, the Fed's raised the federal funds rate by 450 basis points. We're probably in for another few rate hikes. That all signals a significant slowing in demand and even also a recession. The thing that's different this time around from other recessions is labor shortages, and certainly have a number of industries that are still trying to recover. And so as long as you have labor shortages, businesses are less reluctant to let people go. And as long as people are working and they're seeing their incomes rise, especially at the lower end of the spectrum, then, it's really up to the consumer. Will consumers stop spending if they think they're still going to have a job?
Dana, one more question before we get a brief into the weekend with Mr. McKee. Dana Peterson, just real simple. I love your paragraph on experiential services. What in God's... Did you learn this at Wesleyan? I mean, in Middletown, Connecticut years ago, were you experiential? What is an experiential service?
Well, basically anything you can go out and enjoy, like a hotel or a restaurant or a
Bloomberg
movie
surveillance. Yeah, keep it going.
or Bloomberg surveillance, certainly. But those are experiential services. And that's what people are demanding right now after being cooped up for 2.5 years. And that's really making it tough for the Fed to bring down inflation, in addition to the fact that rents are very elevated. It's the fact that people still want to go out there and enjoy things. And as long as there's demand for that, it's going to put upward pressure on prices for those services.
Dana, thank you so much. Greatly appreciate it today. Ms. Peterson is with the conference board there with important research notes. Look to the conference board for her notes. We protect the copyright of all of our different guests. Treasured right now is the copyright of Michael McKee. His Friday note is read far and wide across the Bloomberg world, and we're thrilled Michael McKee could sum into the weekend. My head is spinning. 2022, you and I know, was nuts. Remember the old Angry Beavers cartoon on Nickelodeon?
Yeah.
That's nuts. That's the way 2022 is. Am I right, Mike? It hasn't stopped?
It hasn't stopped, but we're getting a little more defined. We're falling into a channel, I would say, of we're about done with the Fed rate increases. If you listen to the Fed, if you listen to the market, they're going to start cutting rates. So that's going to be the fight going forward. And then it just becomes a matter of how long does it take the cumulative effort of the Fed's tightening to bring down inflation to a level at which the Fed will start talking about some kind of pivot.
You and I in our youth, Rick Wagoner of General Motors, he would try to game China GDP. And that was a responsible thing to sell units in China a million years ago, or Caterpillar or Deere or that. How do you respond to bank CEOs acting as economists trying to gauge a U.S. recession?
Well, they've got to do that in the sense that they're pretty much the closest tied of almost any sector, I guess you'd say consumer products, but to the economy, because they're going to be the ones who are responding to the Fed by raising or lowering their borrowing costs, and they're going to be the ones who see the impact from consumers who are either putting money in or taking money out. So for the bankers, it's kind of interesting. I note that Ms. Bassick has joined us here on set, and one of the things going to be really interested in listening to today is from the calls is what their forecast for consumer spending is going forward, what they see in their data, and also are there any sectors that are reporting problems, particularly with their loans, because so far the consumer's holding up, as Tom says.
Conference calls.
And as far as the conference calls goes, to the point that Mike is making, as far as cards go, credit cards, they're holding on strong. That's where a lot of these reserve releases are even coming from. But if you look at other areas like home, there's a lot of questions still on auto. JP Morgan just started their call. So, let's not get too excited yet.
We have the privilege of speaking to you. You're not on the call, Mr. Diamond.
Well, we have about 7 people on the call from Bloomberg alone, so we could follow it on the Top Live blog.
Nice sales point there.
Well, there are many calls going on at the same time, including Citigroup CFO speaking to journalists while JP Morgan addresses investors right now. And so your point here, how much of that consumer do they want to get? as rates are higher, even if they were to pause or decline, you still have higher rates here. And remember, I think a very important point here is there's only so much money to be made when you expect that even though JP Morgan's net interest income is going to rise, it's still going to come in below analysts' expectations this year.
Well, that's a different thing. Trading the banks and their stocks is your area, whereas I'm looking at what they're saying about the economy, because so far we haven't seen even sectoral problems outside of housing, really, and autos has been more of a supply chain problem. So are we seeing anywhere where in a traditional recession you would see some lending problems?
In the last 20 minutes, make it 40 minutes, I've had Torsten Slok Apollo, Neil Dutta Renaissance, and David Rosenberg up in Toronto with nothing better to do this morning, simply say the Fed is wrong. How wrong is the Fed, Michael McKee, right now? Help Slok, Dutta, and David Rosenberg.
Neil Dutta and I were discussing this over the IB on Bloomberg this morning, another Bloomberg tout here. My argument is that the Wall Street has this tendency to look at what the Fed forecast 3 months ago. In this case, it's just 1 month, but it's still a month ago, and compare that to what the market sees right now and say the Fed's wrong. I mean, the data we have on unemployment, the data we have on GDP, the data we have on inflation, none of that was available to the Fed on December 14th when they put out that last forecast. And also they put out 19 forecasts. And then we just pick a middle, a median, and say that's what the Fed is forecasting, and that's not correct.
One final insight here. What are all these troops saying about traditional banking? Mom and pop banking, I'm going to call it as a general statement.
I don't want to be too extreme about it, but is it dead? I mean, the question about it is, what happens to those Main Street lending businesses? There's been a ton of consolidation. Guess what? At times like these, when valuations come down, there tends to be a lot more. I heard you talking about Michael Barr over at the Fed as well. Will he allow that to happen?
There's a lot of worry
Probably
about this
not.
guy. Explain, you got 20 seconds. Why is Michael Barr at the Fed such a big deal? This has come up 3, 4, 5 times today.
Clearly, the
Is he the Elizabeth Warren of Yale Law School?
Well, there's already been a tough on the banks, kind of tough on finance outlook here under the Biden administration. This is the last shot, really, before the next cycle for the industry reins to loosen up once again.
A lot of decisions have to be made by the Fed, which have not been made yet, and Mr. Barr is the decision maker.
Dip into the conference call. Maybe Jack Grubman will be on it. Sonali Basak here, covering all of our banks, and Michael McKee, the only guy who actually knows who Jack Grubman is, with us as well. Seriously, this weekend, just fascinating as we reset for January into that Federal Reserve meeting of February 1st. Futures negative 37, Dow futures negative 269. A little weight to the tape. The VIX 19.24. On radio, on television, this is Bloomberg Surveillance.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. In Alabama and Georgia, violent weather killed at least 7 people. Much of the damage took place in Alabama, where a tornado cut a 20-mile path across 2 rural communities. 6 people were killed and more than 3 dozen homes were damaged or destroyed. The FAA is out with preliminary findings on the computer failure that grounded all departing U.S. flights on Wednesday. The agency says it was caused when a data file was damaged due to a failure to follow government procedures. Now, according to the FAA, unspecified personnel were responsible for corrupting the file. 2 of China's largest state-owned airlines are giving up their listings on the New York Stock Exchange. China Eastern Airlines and China Southern Airlines are joining a raft of government-controlled firms that have announced their departures from U.S. exchanges. The companies attributed the decision to commercial factors, including the cost of maintaining U.S. listings. Delta Airlines is forecasting first-quarter profit that fell short of Wall Street estimates, and that's a setback for the carrier's efforts to capitalize on a rebound in air travel demand. Delta is being hit by soaring labor costs. And takeover talks at Bed Bath & Beyond. The home goods retailer is on the hunt for a bankruptcy loan. Sources tell Bloomberg firms may also have the option to buy some or all of the retailer's assets in bankruptcy and set the low end of the bidding war so that others can offer less. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
I do think that there's been a little bit more optimism than I would expect around the sort of durability of the economic recovery here, and the fact that maybe we can put this sort of energy shock and the interest rate shock behind us. I'm not so convinced. So I still do worry a little bit about global growth over the next 3 to 6 months and beyond.
Eric Nelson at Wells Fargo, decidedly a success for Wells Fargo in generating strategy here in these tumultuous times. Futures negative 38, Dow futures negative 279. It is bank earnings day. We'll have much more on this. Shonali Basak and our team worldwide in the conference calls right now, generating a forward view for the great American banks. Of course, international banks reporting here along the first quarter way. Euro 108. We'd also know Japanese yen with real strength now, 128.38. You need to watch Japan in their Monday morning, which is our Sunday evening. That will be very interesting to see. We pause now, as we've done on a yearly basis, to talk to someone who had the courage to make a success in a disastrous industry. It's easy to be a success when you've got the wind behind you. But in the publishing, the magazine business, and the thinking business, long ago, Tyler Brûlé said, we need some wallpaper. And he came out with a magazine that I sort of looked at, and I said, yeah, whatever. Okay, great. And we did wallpaper. And that was great on newsstands for years. And then along came Monocle now, a stunning, I can't believe I'm saying this, 15 years ago. If you don't know Monocle, it's the magazine your kids are stealing. It's the magazine you can't get on airport newsstands because people have bought it. And what's amazing about it is the Vogue, Harper's Bazaar thickness of it. Pretty much every month is fall fashion. Tyler joins us now. I'm thrilled to have you in New York. Tyler, you're based in Zurich right now. You continue this tradition. How did you keep the thickness of the magazine during the pandemic?
Well, good morning and thanks. Great to see you, Tom. Part of it was the hustle, just being out there, crossing borders, getting in front of CEOs, having those conversations, and trying to be in studios and being face to face. That was really what it came down to, just being out in the world where possible. I want to get to the money question. We'll do the publishing chat in a moment. I want to get to the money question for every single person in economics, finance, investment, and international relations. What is the Tyler Brûlé best practice or pixie dust on a day-to-day basis to create the enthusiasm for your product that you do? Part of it is just adventure, being exploratory, being out in the world, meeting interesting people, having those conversations. Cameras like this are great. On laptops, maybe not. Getting out of the house. That is absolutely... Do
you delegate authority? Like, did you guys in the pandemic, I can't imagine I'm saying this, was Monocle all Zoom?
No, parts of it were Zoom, but I have to say, journalists are key workers, so people were back.
Mm-hmm.
We were in the office. We were running a newsroom like you were.
In this magazine, folks, and for those of you on radio, it's a big, thick magazine with a fancy Rolex on the ad. They're rigging the register along with the rest of fashion. Dana Telsey with us yesterday knows this. And the whole idea here is it's one part aspirational architecture, aspirational fashion in city, city, city. You are the biggest promoter of number 2 size cities, Helsinki, and the rest of it as well. Where's the city right now to live? Where's the up-and-coming city?
Well, of course, I'm on my way back to Zurich, so we like Zurich. I think Spain is interesting to look at right now.
You and Madonna. Madonna likes Portugal, Spain, the whole thing.
Well, exactly. I think she's back over in this city, I believe. But no, I think Spain is very interesting to look at right now. You've seen, obviously, they've got digital passports just launched. I'm not sure I'm sort of the biggest believer in that as necessarily as a currency. And a lot of interesting second-tier cities to look at in that market. Rachel
from Lafayette, Indiana, emails in, ask Tyler about work from home. I'm fascinated by this. You want people together, mingling, talking. Can you do that with work from home?
No, you can't do it from work from home. I just came from Toronto. Some of the big towers, the banks that you have on this program, 18% in the office. I mean, this is incredible.
Yeah, but culturally, you invented this. I mean, this is really important. Everybody out there battling with this, whatever your angle, this is the voice. Work from home, what's wrong with it?
Well, I mean, multiple things. It's inefficient in many ways. It looks like it's cost savings, but of course, we have all kind of tax jurisdictional issues. Where are you sitting at home? Where is your company based? But the most important thing, all of these companies are talking about CSR. What are we doing for community? You go to the concourse of one of those big towers in Toronto, here in New York, I was in Washington the other day, empty. I mean, 50, 60% of stores empty. And then where is the serendipity? Where am I bumping into you, having that conversation? If we're on Zoom, everything is very scripted. Right. We're very on message. Where's the spontaneity?
The spontaneity, well, maybe it'll be up Happy Valley in the next week here at Davos. But Tyler, if you're sitting down with a consultant cup of coffee with James Dimon, okay, right now he's on a conference call with his team, 288,000 employees, and he's screaming, we need to get away from work from home. What's your process to get Monocle away from work from home? What should Mr. Dimon do?
Well, I think he's probably got some decent workplaces, but I think you have to have a narrative, and to maybe not all of those people, to say opportunity actually comes being face to face. I'm going to find something. There's going to be some nugget from a conversation, Tom, I'm going to walk away with, which I wouldn't get across a screen.
I noticed just in one company, Hermes opened in Nanjing and all that. The luxury is still doing well, and they're Pacific Rim based. Monocle on the Pacific Rim. How large will that China reopening affect?
We're not huge in the Chinese market for a variety of reasons when it comes to press freedom, many things like that. We don't rely on China for advertising per se. Sometimes you get some regional governments spending money, but it's not that important to us.
Do they assist Australia? Does their reopening assist Singapore? And does it assist the effervescence that you people represent?
Well, I mean, just look at Thailand as well, the way they're looking at, of course, vaccines, not vaccines, and of course, tests going into the country. So for all of those markets, China is incredibly important.
The publishing business, can I editorialize? What a train wreck. Did I get that right?
Yeah, many parts, but I wouldn't say in every corner of the world, but yeah, largely a train wreck. We're about to derail in many places.
How do you're in a meeting and you strategically have to save whatever the magazine is. What is the way that publishing can begin to improve?
Well, part of it is returning quality, and this is pre-pandemic. You saw this trend of magazines downgrading paper, going lowest common denominator in terms of production. And we said, no, you have to have an object you want to hold on to. The reader wants to be seen with it. And at the same time, of course, the advertiser wants to be in a quality environment. And so it's been our push to go the other direction. You have to turn a journal like the one you're holding now. It has to become an object which is collectible, and it's a luxury. It's a luxury item. You want to be seen and associated with it.
Carolina Abbott Galvayo and UC Puigdemont killing that. I'm sorry for your photographer. Maria Tadeo emails in, folks, from Brussels and says, "Take the biscuit, Brussels." Maison Dandoin. This is classic Tyler on radio. It's 7 fancy people sitting outside a fancy patisserie. This is Monocle 101, isn't it?
Well, part of it. So it's a celebration of, in this case, a classic business. It's taking people to a city which, is sometimes not most loved. And we want to show, even in a small example like that, entrepreneurship and, of course, and leadership as well, Tom.
What's the trend in America? Is it most loved right now?
Well, America in this issue, it did rank number one when it came to our soft power awards this year. America still has extraordinary soft power, of course, culturally, of course, sport. We look at an expansive NBA going out into the world. It's a tough call because, of course, there's many things that America is also exporting culturally that people on other sides of the Atlantic and Pacific aren't so interested in.
What do we look for from America? I mean, look at the World Cup coming here next number of years. Ferro knows that number. I don't. But the basic idea of America ascendant. Monocles, it's not so much that you've pushed against that, but you've said there are other geographies that matter. Fit America into Monocle 5 years from now.
5 years from now, well, currently still our biggest market. I think it will continue to be our biggest market. Of course, we've got an election coming up. I was just in D.C. I've got to talk to you about real estate. Where should we have our bureau, Tom? I mean, should we go into the National Press Building, or where should we be?
I think that a Bloomberg Monocle relationship would be good. What you could do to our acclaimed food court at Monocle would be something you could bring in the patisserie from Brussels. Folks, this is a celebration of somebody that succeeded in an industry that has failed. Monocles like that, that's a normal issue. Can't say enough about it for just almost like the zeitgeist, if you will, of cities ascendant in the world. Also some good journalism. Tyler Brûlé invented and is Monocle. Don't forget Monocle Radio as well, which is better than good. I've got to summarize here a mostly historic day, and we do this with our team going to Davos here in a most odd year after the carnage of 2022. And I would say more than anything, as Mr. Schwab talks about fragmentation, the fragmentation of society. We're going to be real ascendant this year at Bloomberg Surveillance of trying to cover not so much the fancy people, but the people aspiring, as Tyler Brûlé just talks about in Monocle, the people trying to reach up. We do that with a stunning inflation report yesterday, bank earnings today, and we'll dive into it all next week as well. On radio, on television, stay with us. This is Bloomberg.